All right, and we should be live. Welcome everyone to a very special episode where we're about to have a lot of guests discussing many markets, from crypto markets to traditional markets, with all kind of experience. So we're gonna jump right into the full gallery view. We really wanted a full set of 9 people, but right now we have 8. So you guys can go ahead and unmute. We're gonna do quick intros. I do have many of your Twitter and your affiliations in the video description, and that is where we're gonna go ahead and kick it off. Alex, why don't you? This whole thing was your idea. Why don't you kick us off as you were the one that got a lot of the people on here. So go ahead, tell my viewers something about yourself. Many of the people on this stream have never been on my channel before. So this is going to be great. We're all going to ask very critical questions about what everyone thinks of the markets. Go for it, Alex.
Yeah, no, thank you. And listen, I'm glad that all these speakers answered my texts and emails when I came up with this idea, or just be me and Tone. No, my name's Alex Massioli. I'm the head of institutional services at Bequant Group, and we are a multinational crypto prime broker, custodian, fund administrator, as well as spot exchange. So thank you for having us, Tone.
All right, very cool. And there you go. Finally got to screen share. There's Alex's Twitter. And here is Bequant Group. So Gabor, let's go over to you because you work with Alex.
Oh, yeah. So, hey, everyone. My name is Gabor Gurbach. I'm the Director of Digital Assets at VanEck. VanEck is an investment management firm. We manage around $50 billion in various asset classes. First to bring a gold miners fund to the US, one to bring a Bitcoin fund, Bitcoin ETF to the market. Really excited to hang out with you. Got a Bitcoin correlation piece coming up today, so excited to cover that and talk with all of you. Thanks for the invite, Alex, and thanks for the invite, Tone, as well.
All right, cool. All right, let's move on. John, how are you doing, man? You got on mute, and let's go over to you. Where's your profile? I have it right here.
Cool. Thank you, Tone. Gosh, things have changed so much, guys, just in the last month since many of us were in Vegas. Oh, my gosh. But at Tone's big event in Vegas, that was fabulous. It was great to see so many folks. And I'm delighted to be here with you guys, basically going back and forth. I've got lots of questions. And I know you guys have lots of answers. I might have a few. I'm not sure how if mine will be as good as the rest of yours, but nonetheless, I am delighted to be here, Tone, and thank you, Alex, for putting this together. I'm flattered to be here with the rest of the speakers. Thank you.
All right, cool. And Simon, how you doing, man?
Yeah, good. So I think last time we saw each other was in Cancun at Satoshi Roundtable, and the world has changed.
Right.
So I'm Simon Dixon. I spoke at the first Bitcoin conference in the world. I wrote a book called Bank to the Future, Protect Your Future Before Governments Go Bust, which was the first published book in 2011 to cover Bitcoin. And I run a company called Bank to the Future, and through Bank to the Future, I'm a shareholder in over 100 different crypto companies, from Kraken to Coinbase to Bitstamp, Bitfinex, blockchain.com, Circle, and many others.
All right, cool. Thank you for that. And Evan, let's head over to you and tell us about you and your fund.
Sure. Well, first of all, Alex and Tone, thanks for organizing and hosting. I'm happy to be here. My name is Evan Fung. I'm founder of Tapestry Capital, which is an emerging manager focused exclusively on crypto active management strategies. My background is more from traditional finance, like some of the guys here. I used to do long short equities, investing on a couple of teams at Citadel and then Point72, which are pretty big hedge funds, but got bit by the crypto bug in early 17 and have been kind of spending more and more time over the last few years, and now I'm full-time in this space. So looking forward to bringing some of the perspectives from my past experience to answer some questions and probably ask a few others about the current market that we find ourselves in. And yeah, the website's linked and you guys see that up there. So happy to be here, and thanks for having me.
All right, cool. George, let's head over to you. You're also part of the Bitcoin group, and go for it. Give us an intro.
We doubled up. We're majority from Bitcoin here.
I thought I had your profile up, but I don't. Sorry, I gotta find your Twitter handle here.
Well, Alex already made an intro of Bitcoin, and briefly about myself. I'm George Najarian, founder and CEO of Bitcoin Group. As Alex mentioned, we represent a number of different product lines, and my background is prime brokerage, electronic trading, 15 years in traditional markets. So we are trying to sort of replicate the traditional business model from the investment banking world onto the digital asset space. It's great to see so many people, and I frankly haven't spoken to so many people in the last 3 weeks, and sort of in a FaceTime mode. So it's great to be here.
All right, and we got one more special guest, Dinesh. This is gonna be very, very interesting. Get ready, guys. Go for it, man.
No, this is thanks for having me, man. Jon Najarian. I run the Bitcoin.com exchange. The Bitcoin.com that everybody knows and loves. Tone loves it as well. I'm kidding. But yeah, no, we are a brand new spot exchange that has launched about 8 months ago under the Bitcoin.com brand. And yeah, we're here promoting spot trading and coming out with new features on a daily basis. My background's kind of like Evan's, like more on the buy side. Traditionally, I was with BlackRock for quite a while, so very much in tune with most of what happens in traditional markets, and which is an interesting time right now, given how we've seen the market move over the last couple of weeks. So yeah, happy to be here and looking forward to delving deeper into what's going on.
All right, awesome. Yeah, and you and I met in Singapore, I believe, right?
Yeah, we were at Block Show together, which was exciting and interesting at the same time.
Yeah, no, and had a lot of fun hanging out, and yeah, it's so you basically Bitcoin.com exchange got you to kind of manage it out of the traditional world, right?
Yeah, well, so I was in the blockchain space for a while anyway. So I was at BlackRock for a bit, doing long short equities. Then kind of got the entrepreneurial spirit, created a couple of fintech startups, sold them. Was running a couple of blockchain projects, and then through that, kind of got involved with Bquant, and then Roger, and then kind of came on board July last year. So.
All right, very cool. All right, guys, let me, I'm gonna stop this screen share for a second. I do wanna, we're probably gonna kick off with looking at the price of Bitcoin real quick. We do have a private chat between us, either in Zoom itself, or feel free to use Telegram, which is how all of us are in there as well. Because if someone has to get going, we do want to get all of their thoughts in. I am ready to be here the rest of the day. Just keeping an eye on my traditional portfolio, which is moving. We got lots of action today everywhere. Traditional markets, oil went crazy today, and Bitcoin itself. Let's look at the charts real quick, and then we're going to talk about, this world of investing in while being on lockdowns with Corona and others. Let me pull up the chart right here. I hope that's coming up fully on the big screen. This is, let's head over to look at the price of Bitcoin as it's moving. So, oh, whoa, and we are breaking 6850. 6850 was my line in the sand. I've been eyeing 6850 as a major area of resistance that when broken, Bitcoin would break out. As a lot of people know, hopefully the ones on this channel as well, I've been a huge bear on the price of Bitcoin for what feels like forever, but it's really only been 2 years. But as of a few weeks ago, or 3 weeks ago, right as this low was happening, I became a big bull in the world of Bitcoin. And going forward, I'm a bull, as a lot of people have gotten wrecked and walked away from the space. I like this breakout right here. I still don't think we are going to go into a big breakout today. I still think we're going to pull back a little bit, but the future is very bright. I think we're going to struggle to break above 10,000 this year in a sustained way. I think this year is still going to be a struggle, but I don't think we're going to go anywhere near 3,000 again, or 4,000, or probably even 5,000. Anyone can jump in here. Give us your thoughts on Bitcoin. What are you thinking? Let's start with those that are like currently running Bitcoin operations. Guess let's just stick with Dinesh. You're on, you're running a Bitcoin exchange. What are you seeing with, as far as volumes and people's interest, registrations, things like that?
So volatility was very interesting. We saw an uptick in volume, overall volume, and obviously registrations. But I think it's overall what I'm seeing is we're seeing flows out of exchanges, not like people are cashing out or people are taking Bitcoin off of exchanges generally. I think like the net average outflows are higher than general inflows. I do think we definitely see more than 10K within 3 to 6 months of the halving, which I think it's in May, early May, I believe.
Yeah, a halving is the first half of May.
Yeah, first half of May. I definitely think we've reached 10K, and I think towards the end of the year, my target, or like general spot target that I'm seeing, would be around 20 to 22K.
By end of year?
By end of year. Yeah.
Wow, that's very bullish, more bullish than I am. Let's head over. I want to head over to Jon. Jon, you guys are running Market Rebellion. You're starting to have a whole crypto trading education arm there. What kind of interest are you seeing from your traditional people? Have been following you since before Bitcoin existed, right? So how are you seeing the dynamic shift into people's interest for Bitcoin?
Well, and thanks, Tone. Like Evan and several of you, I'm and Alex, I guess, I'm a traditional finance guy. Been in the market since 1981, stocks, options, futures, and now crypto. I didn't get in as many of these brighter gentlemen did much earlier, but I got in 2016 into the crypto space. We have a crypto room that is launching now, Tone, that is marketrebellion.com/Bitcoin. That I believe is due to launch at the end of April. Right now it's in beta, but if people go there, they can see it, with the tickers and the charting and all the different stuff that we've got. And it's just, again, the name of our firm, Market Rebellion, and then /marketrebellion.com/Bitcoin. But we've seen, Tone, an awful lot of interest in digital assets, primarily Bitcoin and Ethereum, of course. Doesn't mean that the others won't do well, but right now, I think a lot of folks are hunkering down into more of, in the case of this is a nascent or a very early industry still, the cryptocurrency digital asset space, just over 10 years old. So I think a lot of us are thinking that people who are looking for either education or maybe taking a little bit of a punt, if you will, to hats off to my English friends. They call it a punt when you, of course, take a little risk and put a little a trade on as a flyer, we might call it in America, Tone. But when they look at that, they look, I think, primarily right now at the big dogs, the ones with, the multi-$100 billion space that digital assets are in. I think they look at these two biggest ones right now. And again, I'm not saying that none of the others make any sense. I'm just saying that, like Tone, I'm a bit more of a maximalist, especially right now, because I think the focus is on areas that people believe have more embedded value. And I think Bitcoin and Ethereum are those two, Tone?
All right, very cool. Simon, let's head over to you. What is your outlook for Bitcoin? You've been doing a lot of publishing a lot of short videos on your views on everything. So let's start with Bitcoin first, and then of course we'll cover traditional markets as well, which is also your experience.
Yeah, I mean, obviously, I've been a long-term Bitcoin bull from the beginning. I used to be a market maker on the London Stock Exchange, but since then I haven't been trading. So I tend to shy away from short-term outlooks. But nevertheless, I think we had a jump. Yeah, obviously, we saw a massive jump to cash in every single asset, a flight to safety, as this health crisis started to dawn upon people that this is more serious than they were taking it. And eventually, I think we start to see that people start to see how the utility of Bitcoin and what it was actually designed for, the ability to give you the ability to own your own money, which you can't at a bank, the ability to spend your own money, which you can't at a bank, and the ability to have a quantitative tightening rather than a quantitative easing like we see in traditional money where there's a fixed money supply. I think that the world is going to produce more and more examples of how people are going to realize that it's important to own their own money, spend their own money, and have a fixed money supply. And therefore, I think we're going to see more people coming into Bitcoin, not just for speculative reason to protect their wealth and assets, but also for genuine utility, that they actually want to use it as the world starts to show. So I'm forecasting a major financial crisis after this health crisis. Obviously, the government's had to chuck absolutely everything at it to get on top of this. And I think that leads to more people experiencing what Bitcoin was designed for. The reason I've been getting a bit of attention recently is because on my YouTube channel in 2010, I uploaded a video called The Great Depression of 2020s. And I completely forgot that I created that video. And somebody brought it to my attention, and I've been creating almost like I've documented since before Bitcoin to today and the whole journey of Bitcoin on that YouTube channel. And so I decided to get more active because prior in 2019, I was giving a lot of commentary on a real black swan event that I think will happen in 2020 that will expose the systemic risk of our financial system and banking system, and drive the central banks to create their own digital currency to bail out the banks and allow the banks to actually go bust this time. But so I've been given a lot of commentary on that because throughout 2019 I was speaking very aggressively. Obviously, I had no idea what coronavirus was and we'd enter a health crisis. But it turns out that a lot of the things that I've been talking about over the years are actually unfolding right now. But so I'm long-term bullish on Bitcoin. I still remain long-term bullish on Bitcoin. I've been buying into the dips in an environment where I've been trying, I hold still in fiat terms, I hold most of my wealth in dollars rather than other currencies. I live in the Isle of Man, so I have to spend pounds. So I hold some of it in that. But I've also been looking at withdrawing cash and forecasting governments are probably going to make cash illegal over the coming months, especially as some of the cash is actually might be contracting the coronavirus as well.
There's definitely a drive to eliminate cash. I mean, that part's been in my presentations going back to the first time I gave it, I believe at Acapulco back in like 2015 or 16. My first presentation, I talked about the government's push to eliminate cash and how great it is for Bitcoin.
Yeah. I just want to say one thing, though, about the cash carrying the corona. One is there's a saying on crypto Twitter that everybody puts out all the time. And this is the one instance where it's actually 100% accurate. Bitcoin fixes this.
Yes, it does.
Yeah. And the other one is time for plan B, isn't it?
Yeah. No, there's a lot of good ones. So speaking of Plan B, Gabor, I want to go over to you and Van Eyck because you guys have been trying to create a Bitcoin ETF for quite a while. And on my YouTube channel, I talk about doing all of my trading in retirement funds, and I've been using GBTC. I actually entered GBTC position earlier this week, somewhat timely. I mentioned it on my YouTube channel a couple of days ago. And I mostly keep an eye on that GBTC premium. And I don't want to talk to you about it. Let me just pull up a chart real quick. Let me close that. I want to go over to that GBTC chart, and because I have my own custom I guess an indicator, my own custom way of looking at GBTC premium. This is a little bit of an anomaly that did not actually happen. I think this data point will be corrected. I got to look into that some more. But this is like custom indicators because GBTC has this 2% annual maintenance rate. Like for to compare that to other ETFs, for example, and I know GBTC is not an ETF, but it's the best we have. The S&P 500 ETF has a 0.05% maintenance fee. GBTC is a 2% maintenance fee. That means this ETF has been around for over 5 years, and Barry Silbert got to keep 10% of your money for maintaining it. And this is where efficient ETFs can really cut into that that maintenance fee. Not to mention the reason why we have this ridiculous GBTC, and I have like full videos on this, is because it's not very efficient. It's not like GLD for gold in that there's very limited quantity here. So whenever there is a lot of demand, the GBTC premium spikes. So I've done a fairly good job trading by trying to buy at a low GBTC premium and trying to capture some of that. I know you guys have been trying to get a more efficient ETF for a long time. SEC, I believe, is rightfully being a little bit careful in it. Any comments on this? I don't know if you can speak about it publicly, but what are your thoughts as a non-representative of Van Eyck, and what do you think about a Bitcoin ETF, like something a little more liquid and a little more well-made?
Yeah, so we've been working on trying to get a Bitcoin ETF. Can you hear me? I
Yes,
think I'm on, yes. So we've been working on a Bitcoin ETF for a while, and the primary reason for it is that we believe that adding Bitcoin to a regular asset allocation, like the usual 60-40 retirement and other portfolios, may be beneficial long-term. Actually wrote a study about this called the investment case for Bitcoin. And most of crypto shared it, and some of the largest brokerage houses in the U.S. and research firms also shared that. And I go through that, how Bitcoin may be a potential store of value and what it does in an investment portfolio. And in all the cases, it was beneficial to pretty much any investment portfolios that we studied. But in order for the average
Did we lose
an investment and an access vehicle that is liquid, priced on a daily basis, and sort of has appropriate sort of custody solutions. So we've been working on that for quite a while, and so the regulators, it seems like they're just not ready for it. I think it's kind of ridiculous that they are not ready for it. There are assets that are way less transparent than Bitcoin. There are assets in the commodity space that are custodied in a sort of like a less reliable way. We have seen oil ETFs being more volatile, triple X of like bull ETFs crashing 80% in a day. We've never seen something like that in Bitcoin. So just over the past few weeks, I've seen probably close to 100 funds that are potentially worse than what a Bitcoin ETF would be. So yeah, we're keeping this fight to get a Bitcoin ETF to market. And just today, I have a piece coming out in a few hours on our website around what Bitcoin would have done during this crisis to the average 60-40 portfolios of sort of like American retirement funds. And turns out that this adding Bitcoin to portfolios would have actually saved a lot of downside drawdowns and so on. So that is, Tone, what you're pointing to. That's the investment case for Bitcoin on this Twitter account. I'm also going to tweet out the new blog on the Van Eyck, official Van Eyck website, which is just going to run through correlations. And one of my conclusions from that piece actually is that Bitcoin is becoming digital gold. Actually, increasingly during the past few weeks, it has the correlation to gold has increased significantly. Correlation to treasuries, U.S. treasuries, has increased significantly, while the correlation to traditional markets has not. So that's kind of interesting for us. But again, the idea about adding Bitcoin to an institutional portfolio remains just an idea if there are no liquid vehicles like ETFs in the market. I generally don't like to comment on specific like portfolios like GBTC, but I would say, which it's public knowledge, that the premiums were between 10% and 70%. So it is, it's some institutions don't really like that premium, and it is a high cost kind of vehicle. So we are hoping that an ETF comes to market and institutions can now allocate appropriately. Don't have a time frame for you guys. We've been doing this for a few years. I think with SawDex combined, it might be year 6. And the early gold funds took 5-7 years to come to market as well. So,
Gabor, are you hearing positive sentiment as you guys interact with the regulators on that? I mean, it's been a long road, but are you seeing them being positive, or is this just banging your head on the wall?
Mostly banging my head on the wall. I'm doing custom studies and regulatory work for years. But the 3 major areas that they were looking at were custody, market manipulation, and pricing issues. We think that most of the pricing issues are solved. The custodians are kind of coming into market slowly. But today there are no federally registered banks that custody Bitcoin, and that's one of the reasons why the regulators are not comfortable with it. Market manipulation, people would be surprised to say this, but I think that's not the biggest issue for regulators to approve a Bitcoin ETF. It's there are reasonable surveillance software out in the market, and crypto exchanges have gotten better over time. The custody portion still remains to be an issue, but again, so that's we were working through problems kind of one by one, but you'll see that we're not giving up this fight. And we also have, and this is just for institutional investors only, qualified institutional buyers only. There's a 144A, a private fund that we have launched as an experiment. And it's kind of an interesting structure. It offers exposure to physical Bitcoin, and you might hear news around that product down the line.
Interesting. Gabor, just
to jump in, I guess I had a question that I think the audience would sort of benefit from as well, related to that point about maybe banking being the last long tent pole before an ETF could become more digestible. I guess, do you think that clarity might come from still the expectation being that it will come from the federal level, or some of the legislation that is starting to come through in some of the organizations like, Caitlin Long's Avanti in Wyoming, is I guess state level something that may see greater traction, or kind of allow maybe backdoor compliance in a way that is ultimately going to be what regulators are comfortable with as it relates to sort of the banking requirements for ultimately an ETF approval?
So you're correct in that there's no sort of like federal guidance on what the custody rules are, or what the capital requirements are for holding Bitcoin. It happens on a state-by-state basis, and actually it makes things more complicated, because capital against Bitcoin in New York for different companies is different, and it's different from California, it's different from Wyoming. So, and most of the business is done by sort of like state-registered entities that are not acknowledged in the federal level. So again, I think that's an issue. Eventually, I think you're correct in that a state-level entity may break through and be accepted as a standard. We've seen, Fidelity coming to market with a custody solution backed in some like really massive organizations, and I think the solutions that those organizations provide are as good as you can get. And in fact, people don't know a lot this, but against traditional exchange traded funds, there's not like the custody requirements are not not that crazy. So there's not like 100% backing of assets and all these things that people know think that just come with ETFs. It's all sort of like it's all custom. And I would actually say that the biggest issue is that Bitcoin does not have a central clearing system and prime brokers in the space. So you're not able to sort of like reissue shares and things like that if you lose assets. So in some ways, it's like the 1920s and trading paper assets from between banks in the 20s versus the central clearing organization that we've built over the years. In fact, it is a fact that no ETF shares have ever been lost, and this is because of the delivery and payment kind of structure that is done by the DTC, the Depository Trust and Clearing kind of organization, and that doesn't exist for Bitcoin. And so, but then again, does that exist for gold? No. Like there's $8 trillion of gold out there, 4 trillion paper gold trading in China only, and arguably the gold market is less transparent than kind of the Bitcoin market. So like, why is there a double standard against Bitcoin? That's my biggest issue, and I think it's very unfair for many regulators not to allow Bitcoin to compete in the free markets. In fact, like I would add that people think that the SEC's job is to make decisions on the merit of a product, but really the SEC's and other equivalent regulators' job is to evaluate whether disclosures are appropriate or not. And lately, it looks like their rules have expanded.
So just to close out this topic, another question is like, I'm surprised to hear that market manipulation is not a huge consideration given the size of the market, size of Bitcoin itself. It's like, I think it's like 125 billion market cap or whatever. Given that it's so easily manipulated by somebody who's got, a large enough stack to kind of, either run the futures, run the margin or whatever, and kind of cause enough volatility, I would have thought.
But like, see, this is, Dinesh, I want to push back on that a little bit. I hate using the word manipulation to describe that. It's like accusing a guy with the biggest chip stack at a poker game of manipulating the poker game, right? As long as they play by the rules, why can't they move the market with their money?
Fine. I mean, yes and
the
no.
Other point that
I just didn't think that sort of, whether you call it manipulation or not, whatever it is, that volatility, for example, isn't that a big consideration in approving an ETF at all?
I don't know. I agree with Tone. I don't know where you draw the line between price discovery and market manipulation. I think it's certainly part of the FUD that has continued to weigh on this space, but that's what you get when you have a super liquid asset class that trades 24/7, but has characteristics of early venture capital style deals in terms of the upside potential. I think probably what people conflate together with market manipulation are actual criminal acts like fraud or other types of I guess maybe spoofing, although there's situations where some of these spoof orders ultimately run into somebody else with deep pockets and actually get filled when they were intending to push price in one direction or not. So it almost feels like I think it's a problem that will solve itself over time structurally, but maybe that's being too optimistic too. I can see both sides of that coin, but I guess I tend to agree more with Tone on that.
Can I give just a quick note on that? So one example, I'm originally Hungarian, and the country of Hungary has a currency called the Hungarian forint, which is HUF is the ticker for that. So that currency is controlled about 90% of it by 80% by Hungary and another 10-12% by the surrounding 6 countries. And there are tons of financial products on it. Should there be no financial products on the Hungarian forint because it's so centrally controlled? And I think so that's kind of a faulty agreement. If there's people who have large stacks should be able to build financial products anyways on that large stack. The other point that I wanted to bring up that the 2,600 billionaires, largest billionaires in the world, control about 72-73% of assets that in all kinds of companies. that is arguably more centralized than any potential kind of Bitcoin concentration. And should we not trade equities because of that? Or like, so the argument is kind of faulty when we're talking about market manipulation. If Facebook came to market, like 70% of the shares was controlled by the founder.
Somebody who holds like a large amount of equity in something, you can't so there's controls in place, right? So when we used to trade back in the day, like we used to trade size, like it would be 10-figure sizes or whatever. But you can't immediately just be like, oh, I'm just going to sell it all and immediately dump the market or like do any of those things. I think it's more, have concentration of assets. It's fine. You can have a large site, do whatever you want. I think there's the controls in place are different when you're comparing it to the equity markets, right? Like you can't just place an order to sell $10 billion of market sell $10 billion of Tesla shares, right? Like that's not something you can do. And so that's what I mean. Like
that's
it's like
possible actually. Like if you have that amount of shares, it's just like what tanked the market and there's maybe a more mature market structure.
Pull out like a lot of steps. And I think it's more when you talk about the ETF, and again, I'm pro ETF and I really want it to happen because I think that's when it's going to increase the overall market size and market share and bring more people in. I just thought that manipulation is one of the bigger things because the ETF goes into people's IRAs and ISAs or whatever it is, and it becomes part of a wider ecosystem and that sort of thing. And so that's why I thought the manipulation, quote unquote, would be a bigger concern.
So crude oil is the largest and most traded commodity. There is a supranational small organization with a few players called OPEC that literally decides about the output. They don't report to governments or anything. Oil has tanked, like XXX ETFs have tanked 85%. Should we ban oil funds or the trading of oil?
I will say that all triple leverage ETFs should be banned. I think those products crush the consumer that doesn't understand how to use them. So I don't know if
but there's other leverage in the system. The world is leveraged 20x. There is let's say 180 billion worth of GDP out there, and the total outstanding derivatives are about 1,600 trillion. So the world is leveraged 20x in some ways, right? So like,
right. I mean, like the oil futures contract is pretty leveraged. It's 1,000 barrels of oil. I mean, if someone wants to really speculate on a leverage oil bet, let them use the futures market. I just think those XXX leverage ETFs, I mean, the consumers just have absolutely no idea what they're doing with those. And I've seen so many people get burned by them in my, 20-year trading experience now.
Yeah, no, I think you're right. But then again, I think like the simple exposure vehicles we'll see other products and tokens in the future that will represent virtual assets. And I think it's so important that regulators figure this out now. Because not everything is going to be physically represented as a commodity or as Hester Peirce put at the SEC as an item on the elemental table. So we need to figure out like how we're going to allow capital formation and trade them on a market structure that the world feels comfortable with. Because if we don't, then we're seeing like what we're seeing in crypto. Literally a parallel universe has emerged and people figure out ways to trade it outside of the system. And literally billions and tens of billions of dollars of value accrues outside of the system as opposed to, within the system, adding to the system, making it better, using the advantages that the current system has. And stuff like that. So, but anyways, that's we could talk about this for hours and hours. I want to make sure
let's wrap up the ETF topic here. I just want to point out one last thing real quick. On my blog at the beginning of the year, in the first week of the year, I'm not sure why. I guess I'm running too many things in this giant live stream. One of the 5 things I said to look out for in 2020 was statements by the SEC that they are going to be looking at the Bitcoin ETF more favorably because I think it is time. But I do think that the biggest, I guess they have 2 big hurdles. One is custody, and hopefully, so let me go to my blog. So hopefully the custody will be solved by companies like Fidelity and perhaps Bakkt. They could, give the SEC some comfort as far as Bitcoin custody. But the other issue is, and you hinted on it, is the fact that unlike the equity markets, Bitcoin's liquidity is split across all of these exchanges. Like we have, we're being represented here with Bitcoin.com exchange, and then Kraken has its own liquidity pool, and Bitstamp has theirs. And that's not how it works in the traditional world, where liquidity is kind of pooled, and you're preventing one guy with $10 million from moving the price of Bitcoin. If all of these exchanges in the Bitcoin space were actually brokers, the way we have interactive brokers, E-Trade, Scottrade, and others, then it would be very difficult for one player to move the price of Bitcoin like it is now.
Yeah, also, I think on the plus side with the ETF is the longer we don't have an ETF, especially in times of a financial crisis, the more likely people that want Bitcoin exposure are actually going to have to do it the way where they own their own Bitcoin. So personally, I think it's a net positive that more people in a time when, holding your money in a bank would be put into question, at least get to try and experience Bitcoin the way it was originally intended. And maybe if we had an ETF right now, it would just be a bunch of people piling into the ETF, causing a centralized pool of Bitcoins that might, in these uncertain times, lead to, without an ETF, a more distributed and people actually taking the time during this lockdown to actually figure out how they can actually own their own money rather than give it control to a custodian.
Yeah, no, and you're absolutely right, Simon. And that's been one of my concerns that I've been talking about for a long time. It's this double-edged sword where having a single pool of liquidity and an ETF would create awesome stability in the price of Bitcoin, but it would potentially endanger Bitcoin's uniqueness of being this decentralized asset, because now a large pool of Bitcoin could be under the potential confiscation by a single government entity.
I mean, right now it's crypto exchanges that hold that pool of Bitcoin, and they are state registered, have kind of like not much money, and very low regulatory status, and not, I would say, limited capability to fight back against regulatory organization versus a big Wall Street firm that worked with them for 50 plus years. So I think that right now the average person is not gonna. Unfortunately, that's what I found, that the average person is gonna go to crypto exchanges and buy and hold assets there, which are you can. I love crypto exchanges and stuff, but it's like they're still early stage businesses often, and those companies, you really trust them that they don't run away with your money. And we've seen a few sort of like cases where it didn't work out as much. Whereas, in an exchange traded fund, you actually have rights to the underlying assets, and that would be the differentiation. So I think, unfortunately, very few people are experimenting holding their own assets, and which most people should to get the original Bitcoin experience. And I'm a big fan of that. The analog from the gold space is that in the before the early 70s, actually people held their own gold bars and held at the banks. There's tons of bank robberies at kind of local state type of places, and then the ETFs sort of helped like bringing more money into the space, which helped building the security around gold. Like in the 60s, gold was around something like $200 million, kind of early 60s, late 50s, and then went to 8 trillion today. And that was because there's more demand for the traditional system, and the security of the holding gold bars sort of was increased. But anyways, gold is probably not the best analogy.
Can I say something? I mean, what are we discussing here? I mean, we're all interested in the space to grow bigger and better and have more adoption, right? And I think the ETF is one of these evolutionary steps that must happen for this new new benchmark to be reached in terms of liquidity, in terms of stability, in terms of the higher adoption. Would you agree?
Well, I
Yeah, I
also
mean,
just want to point out that we have a person on the panel here who's the founder, co-founder of an ETF, Mr. Jon Najarian. So he's experienced in the current ETFs and life cycles as well. Sorry to interrupt, Simon.
Let's get your thoughts and tell us more about the ETF. Yeah, unmute.
Well, you guys have already, and the gentleman from VanEck certainly knows the real issue here regarding an ETF for any of these digital assets is trying to peg a price and trying to figure out what the price would be of that particular asset, whether it's Bitcoin, Ethereum, whatever it might be. Obviously, the biggest one, Bitcoin, would be one that VanEck and others have tried to get out there. And the real issue, again, with the SEC approval for that would be, their perception that they really can't come to a price. Now we could blend that price, and I'm sure many of, I'm sure VanEck and a host of others have tried to pitch them on the idea that, hey, what if we took an average price of the top volume trades of that day, sort of a VWAP sort of approach to figure out what the final price is at the end of the day, Tone, or something like that. But, it's not at all the same as having the lit markets with, for instance, one of the ETFs that we put out was a cannabis ETF. And it's basically publicly traded cannabis stocks. And with that, it's relatively easy to say, here is the price, whether you peg it to the opening or closing price, here's the price of that particular asset right now. And thus, if you bought it and if you had any derivatives on it, here is the value of that particular asset right now. That's, relatively easy. And people have been doing it, and VanEck has been wildly successful doing that with regular products like this for a long time. But until they get to some sort of an agreed upon price, they're not going to approve an asset like this until they could get to that, in my opinion, Tom.
Yeah, no, it's great. I just want to comment a little off topic, but I want to comment on the marijuana and cannabis ETFs. I've been looking at them on my streams earlier this week, and I'm liking how they're bottoming. I already entered a few positions in this bottom, Tilray being one of them, and then there's one more stock. Was it Aurora Cannabis? And that's because I didn't know there was an ETF, so I went into I went right into some of the stocks that I was watching bottom. I think that industry is finally ready to recover, and coming out of this potential insanity, I think there's going to be a need for that stuff by a lot of people.
Oh yeah, and I'm a guy that I have no problem with people using it recreationally, of course. Where it's legal, go for it. And I think that there's lots of medical endorsement of what you can get out of both CBD, without the flower, as well as THC. By the way, our symbol is THCX. It's the cannabis ETF is the name of it.
I'm gonna pull that up. Hold on.
Through innovation shares. But again, there are so many folks, Tone, that just, I'm agreeing with you that I thought we would have seen the rebound earlier this year, and it just kept, selling off. So I think the folks that have held off, as you have until recently, have been the smart ones, because, look, that's it, as it, tried to make that recovery, and it went right back down and tested. You guys are better at charts than me, but, when you look at that, and see where it was at the end of 2020 and how low it got, and then it tried to make that recovery and fell back. There are several.
What was that ETF again, John?
THCX. So THC with an X at the end of it, because that was the symbol we could get at the time. And we launched that one through innovation shares. But you know, that harsh sell-off into the end of the year was somewhat expected because of people trying to take those losses and match them up against gains last year. This year, not too many of us have any problem with the gains and matching up losses against gains. But this one, this ETF, or as you said, Tilray, oh my God, Tilray with the prices, the decline that that stock saw, just dramatic. I mean, our ETF has about, I think right now, 28 different stocks in it, that cannabis ETF. And there are at least 2 other ETFs out there for cannabis. Ours only has things that are related to cannabis or CBD. So for instance, Philip Morris, some companies, some ETFs have Philip Morris in them. We don't, because that's really a tobacco stock with this much cannabis as part of that through Juul and so forth. And we figured that's kind of like not giving people exposure to what they really want. I would love it if we could get a Bitcoin ETF out there. And I agree that there are pluses and minuses of that, but I think it would be more of an endorsement that this is a real asset class for the people who don't believe that it is. Obviously, none of you guys, but for the people who decry crypto all the time as some sort of a Ponzi scheme. I think if there were really an ETF out there for it, Tone, it would be something that would be more proof that this was a real asset class.
Hey, thanks, John, for that. I'm going to follow up real quick, but we have to say goodbye to some people.
Okay.
It is a work day, and some people have to get on work calls. I believe Evan and Gabor, I think we have to say goodbye to you guys. Any closing thoughts? Thank you again for joining. Gabor, would love to have you on another stream sometime, over the next couple of months to talk a little more in depth, maybe one-on-one about the whole ETF structure and the potential of a Bitcoin ETF. We can do a standalone stream as well.
Yeah, definitely. Thanks, guys, for hanging out, and thanks, Alex and Tone, for the invite. I'd love to stay in touch with all of you. Just drop me a message on Twitter or anywhere. And my piece is coming out. I'll send it to you guys on Bitcoin correlations and maturation this afternoon. So we'll ping it over.
I can't wait to retweet it. Tweet it out, tag me. I'll
okay.
Gabor, thanks, man. Appreciate it.
Thank you, guys. Have a good one, everyone.
Thank you, Evan. Take it easy, guys.
For the confusion. I'm actually not hopping off. I was just
good.
Gabor in the chat.
Sorry.
Thanks, Gabor.
Happy to stay around. Yeah.
I do.
Okay, great. Sorry, my bad.
I do want to bring up
as well.
I want to bring up a two-part topic. One is the volatility that's been going on this month, and have George and Evan and of course Tone kind of weigh in on that and how that's been positive or negative, whether to counterparties or traders. Also, a common theme going on both in online, Twitter, and currently in our chat right now is the bottom. And does anybody on the panel have a particular opinion on whether we've hit the bottom yet, whether we're going to bottom out, what the trajectory rate is going to look like for BTC? So first, I'd like to hit the volatility and then talk about the bottoming.
I talk so much about this stuff on my own channel. I'll let others jump in here.
I guess happy to go first a little bit. Obviously not investment advice, just kind of my own thoughts on some of these topics. I'll handle the bottom question first because I think that's an easier response, and then I'll talk about volatility. I think just personally, this is probably not a very differentiated view, but when you look at aggregate spot volumes during the night of March 12th, and I guess through the day too, right, kind of the two-leg trading off, it does look like that is a pretty classic form of capitulation in spot, plus what we saw with the levered unwind on MEX and even a few other derivative exchanges seems to suggest, at least in the current market regime, that odds are higher that we have bottomed for BTC versus not having bottomed. Of course, that could change if some of these macro factors worsen with coronavirus maybe resulting in a multi-quarter kind of depression style demand and supply shock, just given how levered we are. But I think the offset that makes me a little comfortable and supports the idea that we have bottomed is just some of the Bitcoin and crypto specific fundamentals with the halving supply and other dynamics with inflation expectations starting to creep up. They haven't yet. I think that's something that I'm looking at, whether the Fred data or other ways that you can track it from more individual consumption in level basis. I guess, happy to wear the egg on my face if I turn out. Wow. Okay. We just teleported, BTC spot teleported over 7,000 while I've been talking. So we'll see if that.
I think you literally just joined the market. I'm not sure.
I'm not in the market. No.
We're at 71. Yeah, we're at 7,100. And let me tell you, the screen is moving so fast right now.
Oh, wow. Yeah, we're going to take a look at that in a second.
I don't want to jinx it. But anyway, so I do think spot's probably bottomed, and volatility is, it's a double-edged sword. It's price discovery in action. And I think we talked about some of the market structure that has led to the volatility that we saw on the 12th and through kind of the week or two after. I think some of those counterparties that may have been forced sellers, I've been hearing similar things to probably other investors in the space, are whether they're market makers or maybe funds that were a little too levered and didn't manage their cross collateral across some of these derivative platforms. I think they've since been forced to exit the market, but for every market sell, somebody was able to buy that, right? Whether OTC or on some of these lit exchanges. So I'd like to think we're through the worst of it, again, as I said, in the current regime. But at the end of the day, I think people that are in this space are net long, whether reputationally or through their actual positions. And one of the reasons we are is because we believe, rightly or wrongly, that the skew of the distribution of returns is ultimately more positive than negative. And that's still my view. And, we're all happy to kind of re-examine that from time to time, but I have not seen a reason to change that view for the time being, at least looking out towards the medium to longer term. So that's sort of my market thought.
Before Tone weighs in, because I know Tone's getting excited right now, but just that speech alone put it up another 100. So thank you.
Nice. Hey,
I only want to be blamed for making it go up. If we retrace, that's not my fault.
I want to get Dinesh in here, but also, Dinesh, I know it's a little later in the UK where you are, so I'm going to join you with a drink. But before my ice melts, check out these ice cubes right here.
Oh, what are they like? Oh, dude, those are dope.
Bitcoin.
Bitcoin. Oh, nice.
That's a real ice cube, man. So I'm gonna join you with the tequila, but I'll comment on the price after you guys go. So go ahead, man. If anyone else is an active trader here, I don't know if you are running an exchange. I don't know if it's legal for you to be trading, but Bitcoin has no rules, so go for it.
Well, a bit of data we're seeing at the moment is obviously as a shareholder in many of the exchanges. So Kraken has had an 83% increase in sign-up rates. It's had a 300% increase in KYC. With Bitfinex, in terms of Tether, the market cap is up to 6.1 billion. So what we're seeing is a lot of USD deposits at these exchanges right now. The interesting thing, like some of the data we're seeing on Bank to the Future, is because we have a market for buying and selling some of the shares in these exchanges. Because equities took a big hit, we saw some of the equity value and valuations of the exchanges go down as people were fleeing to liquidity. But at the same time, the volume increasing. So it's creating some really interesting opportunities to get a discount in the equity of these companies at the same time as their volume and KYC increasing, at the same time as the level of USD. So what we're seeing from the data at the moment is that there is a lot of USD entering the crypto exchanges. So I think that is, the initial shock of the health crisis, people thinking that Bitcoin should have been uncorrelated to the stock market. So there was that initial shock of, oh, wow, Bitcoin is not a store of value. Led people to do a lot of panic selling, people selling Bitcoin that wouldn't have normally have sold.
And also, Simon, when people are squeezing to go to liquid, it really doesn't matter at the end of the day what that asset is, right?
Absolutely, yeah. So you have that initial shock, and as people are starting to realize that Bitcoin was designed to solve some of these problems, and as I said earlier from the Vanek guy, that he's going to be reporting some more data on the correlation with gold, that's going to be a really interesting piece of data. I look forward to seeing what that is. But as you see, the reality is that this health crisis forced the government to chuck absolutely everything that they have got at the economy, at trying to prop up the economy and support people in this dire time of need. Which essentially is a complete reset of our financial system. As people are sat at home right now, I think people are thinking about waiting for their helicopter money, deciding what they're going to do with that money, deciding that actually, screw the mortgage, I need that right now in case I need to buy food. The reality is that that's going to lead to mass defaults on mortgages right now, which is going to expose the banking system for what it is. And at that point, when you start to see policies designed at saving the banking system, that's when people start to realize I need to diversify, not into an ETF, but into an asset class that allows me to access money no matter what happens in the financial system. And people are going to realize that at different stages throughout this financial crisis.
Now, I see we have a new guest, Mr. Ugly, who I met for the first time in Las Vegas. But before we go to Ugly, I just want to get George's opinion on what he's kind of been seeing along those same lines with the volatility this past month.
Thanks, Alex. Yeah, I mean, from the institutional perspective, obviously, traders who use the machines to trade volatility is fantastic. That's where they cash out massively. But if we look at the long-term perspective, the retail investors that got wiped out, and we've seen BitMEX having the record liquidations, and this month, in the long term, obviously this is absolutely destroy the potential growth of it. But I mean, again, for the industry in general, exchanges in particular, it's been a great month, right? We've had a record volumes, despite the fact that the price of the Bitcoin went down in dollar amounts. Our volumes have gone up massively. So we need to sort of see how the volatility with introduction of sort of more institutional products like more derivatives, ETFs coming into place, the price of Bitcoin could become more stable, more civilized, and we could avoid these kind of waves of extreme volatility, which obviously hurts the market.
I don't think we're about to see any change in volatility of Bitcoin. I think the way that people look at Bitcoin is that it's what I call a speculative store of value, i.e. the world is speculating on whether it can become a store of value. Obviously, gold is a preserver of wealth and Bitcoin is a speculative store of value. But as long as the majority, we're in a situation right now where most of the world has heard of Bitcoin. The majority of the world think it's a fast way of making money, a get-rich-quick scheme, a Ponzi scheme, a currency just for drug dealers, or an outright scam. The reason that there is a price differential between what if Bitcoin does become a store of value and a speculative store of value is simply because there's money to be made from the world not realizing that. And as Bitcoin moves from the world thinking that, what it is to discovering what it actually is, that's what creates that. And it's only then when you can start to see some kind of decrease in volatility as it can potentially reach some of the median of exchange and unit of account properties later. But I think we're really far away from that. And that's what's going to excite lots of the traders to this market. I think Bitcoin's going to be ultra volatile for a long time.
It will be, in fact.
We just broke 1,000 live viewers, guys. We're over 1,000 live viewers watching us right now. I want to say that, yeah.
I think volatility is great. I completely agree. I think like volatility is what makes the market for us, for Bquant and for Bitcoin.com sort of thing. What I would be unsure of is if we're headed for more volatility, because as Simon, you put it, my personal view is, and more the economic personal view is, general overall market depression is just coming. We're going to see it. We're not seeing it right now. We're seeing just like the blow off top from what's happened. But in the general equities markets and fixed income markets, we'll probably see it like 6 months, a year from now, when like, you know, the actual coronavirus effects are going to hit. And so it'd be interesting to see if like actual volatility decreases because the market grows in general, because people think that Bitcoin is the asset class that people want to get into, and the market just grows exponentially, or it just causes more volatility because people don't know where to go. They go into cash, they go into whatever, and just kind of use Bitcoin as like an asset transfer. So
there's one group in the current market state. There's one group of investors that is basically doesn't have a say in the market, which are the institutional long only kind of funds and sort of traditional institutional investors. And this group could really even up the space against the speculators, against the algo traders, and actually decrease that volatility. That's my view on this.
All right, let's get ugly in here. So the original question was, has Bitcoin bottomed? And I believe, Ugly, you and I discussed this a couple of weeks ago, and both of us believe Bitcoin has bottomed, and it's up we go. It's rising a little bit higher and a little bit faster than I thought it would, but I've been a big bull for a while now and remain so, and I'm pretty sure you're with me on this one.
Yeah, the basis and backwardization called it again. I mean, it didn't give you very long to get in, but you know, we took futures down there at $1,500 over under spot, which was just incredible. I mean, I kind of got lucky because I'm like everybody else in the world, I got wrecked on the way down, but I immediately, you know, I know enough that when I get wrecked a couple times a year. When I do, I put money right back into it, and I come back in, and it's sitting there at $3,200.
And I hate the way you use the term wrecked. I mean, you can get the way you use the term wrecked, you can get wrecked 3 times in a month, and you're still going to come out on top by the following month. Like when most people get wrecked, they never trade again.
Well, yeah, and that's, I mean, this is such a classic case of poor money management, and there's no excuse for it, particularly with these derivatives type. I mean, we have innovation in trading, which is just incredible. I mean, come on, guys. I used to trade futures. I posted the old silver chart when Hunts blew out. It was limit up. You couldn't get in or out. It was untradeable. And these markets are liquid. And if you get blown out and you're completely wiped out, it's just because you didn't manage your funds right. I mean, it's that simple, because there's no excuse for it. You should never have more on an exchange than you can afford to just completely throw away.
Yeah, no, and that's true. I mean, I know traders that literally got wrecked during 9/11. They were like long airline, they were like long oil in the futures markets, and they were like hedged with like other assets, and they couldn't get out. Like they had no chance. Like it was just over.
No, you can't. And that's the difference between what we have now and the futures market. You can't, I mean, every time I say Arthur Hayes, I take my hat off to the guy, because he's given so much innovation to the markets that I get. And people, this generation doesn't understand how great these markets are, because you literally can, I mean, I used to get hooked, and I would not only lose everything in my commodities account, but I'd owe another $500,000. And then you're sitting there. Sometimes took me several weeks to meet the margin call just so I could get back even to trading. So, you know, this is the whole, you know, like I say, the key to successful trading. This Bitcoin is a speculation, guys. It's a lousy store of value, and it sucks as cash. It just is. I mean, there's no way you can say that Bitcoin's a store of value. And yet I recommend dollar cost averaging. I put every government entitlement I get, I put my Social Security, ever since I started collecting Social Security, been putting into Bitcoin. It's made me a Bitcoin millionaire just by saving $1,000 a month, you know, since the peak, you know, in 1915. So, you know, it's, but you can't, look, we're not going to get stability in Bitcoin until you have free market banking emerge with the free market in Bitcoin. Because what you need to do is we need to have banking regulates the money supply. And by having free market banking, which is really what E.C. Harwood outlined it as self-liquidating commercial paper, that's what regulates the money supply. It's not Milton Friedman's monetarism where you inflate it 5% a year, but rather it can be inflated and deflated depending upon the market. It's called non-inflation. You can create ex nihilo. It's not ex nihilo because you're creating purchasing media out of new goods coming into the marketplace. That's what banking is about. And that's the service that they learned to create under a gold standard. Very few people own gold. The only people that own gold under a gold standard were the banks, okay, a few rich people, and that was mainly it. Rich people and banks. The average person, they could own gold. You could have a $10 gold piece or $20 gold piece, but very few people did. They didn't need to because everything else was priced in gold. And you know, that's where we're going, at least on an international scale. And you know, I'm all for. I'm very hopeful that's what's going on now. We'll see the resurrection of the governments having to compete. They all resurrect the gold standard. I'd love to see Bitcoin compete with the gold standard. That'd be the greatest. I mean, can you imagine that? Something I couldn't have ever even imagined 40 years ago. I think it could be coming. I think it could be coming.
I think
I don't think the gold standard's coming back, but you never know.
Well, it's limited. It would be limited to gold has a physical limit, okay, and so it's going to be limited to nation states, and that's what Hayek saw. Hayek didn't see competing free market standards. He saw a free market standard competing with government money, and so.
One could argue though that fractional reserve banking was a free market solution to money creation. It was where the government outsourced the ability to create money to the private banking sector every time they issue a loan. Now, granted,
they actually adopted it because it was already created by the marketplace, and then they incorporated it with the Federal Reserve Act. But it was already the bankers have learned how to do it. They learned how to create, and it's not. Fractional reserve, that's a big misnomer that I blame Murray Rothbard on because he wrote the book, The Case for 100% Gold Dollar, which doesn't work. That's what we have now with Bitcoin. So you do need, it's not fractional reserve. What it is banking that you create money that represents not, when you create that money, you can purchase not just Bitcoin, but any other new product coming to the market. Well, guess what? There's a need for a whole lot of new products now. We can't even imagine what the market is going to need after this mess.
Yeah, I agree with you. It's not fractional reserve because there is no fraction and there is no reserve. So it's a very misleading name. The reality is they create as much money as they're willing to lend and people are willing to borrow. But in terms of a movement from here, I think we're doing the complete opposite. What I see happening is that governments have had to chuck record levels of money like we've never seen on a scale in order to overcome this health crisis. When individuals start to default on their mortgages, it will expose the weakness of the banking system and private created money that was issued as debt. I think the government's reaction to that is going to be that rather than let the bank go bust, rather than bail it in, rather than bail it out, rather than them have to bail in themselves or then bail out, I think what we're going to see is a central bank digital currency issued whereby central banks actually wage war on retail banks. So let the bank go bust, you download your wallet with the central bank, and if you had $10,000 in Citibank, you now have $10,000 at the central bank and the bank can go bust. And essentially we move to a form of money that's way more centrally controlled. It will be more transparent because rather than having these M0, M1 and credit creation and manipulating interest rates in order to control it. But that form of money that you're going to see from the central bank is not going to be a pretty form of money. It's really not going to be a nice form of money. If the government, in a time right now, you're doing a deal, maybe you're sat at home doing a deal with somebody in China, the government in China believes that you owe some tax, the government in America believes you owe some tax, and you're going to have two competing governments trying to automate tax collection through the central bank digital currency. Probably at the end of this virus, they're going to be asking people to get, their vaccines or whatever it may be. And we're going to have tracking on people as well, because they're going to need to see who's got the virus, who's not got it. And this is going to all be automated and integrated into the central bank digital currency. I don't think we're moving to a gold standard or anything like that. The only shot we got is competing forms of money so that people can decide whether they want to use Libra, Facebook, the central bank digital currency, money created by a bank, or Bitcoin, or whatever it may be. So I think we're moving in the opposite direction after this one.
Well, I would agree. That seems to be the most likely scenario. I guess I'm talking about my hopeful scenario. I did do a little bit of original research because I've been pretty well sick myself. I don't think it's coronavirus, but it might be. But I did look at a very similar situation in the January 1923. I didn't really realize, but France invaded Germany in 1923 because they weren't getting their reparations. So it's kind of like France was the coronavirus, went into the Weimar Republic and says, okay, you haven't been paying us what we need. Now, they've been inflating their currency slowly, but what happened is public policy changed. When France invaded Germany, the German says, okay, we are going to pay all of our people as though they're working, but we're asking them not to work. Do not do anything to contribute to these reparations, which is almost identical to what we have going on now. And it set off the German hyperinflation. Now, I don't know if that's a valid analogy or not, but I don't think it's something we should ignore.
Yeah, that's interesting. I probably want to look a little more into that. Hey, Alex, do we have any questions? Let's get some audience participation in here. I know we have a little bit that, where did that screen go that I had with some of the questions? There was a question about the ETF. I wish Yevor was still with us, but someone said, if there is a Bitcoin-backed ETF, would you be able to take delivery of the underlying Bitcoin? And I mean, I don't really know how it works, but I'm pretty sure you as an individual sitting at home in front of your TV would not be able to take delivery. But if you're an institution, you probably could. That's my simple answer. I don't really know how the mechanics work.
You could, in the securities world, you could actually have the ETF underlyings to be delivered in kind. So it depends on the structure. It depends on the structure.
Even as like an at-home like trader?
Doesn't matter. For retail clients, institutional, equally, it really depends on your broker or prime broker service.
Right.
But I recall we've back in the days in the prime brokerage, we did exactly that. So some of the clients would trade arbitrage the ETF versus underlying a basket, for example, and you could actually do the fungibility mechanism.
Well, this is critical on in my mind with the Backett contract, and I haven't been able to get the answer. I mean, because basically, yeah, I don't want a Backett certificate, but if I can get the physical delivery into my wallet, and it appears, but nobody's been able to answer my question. Nobody answers it. If I wanted to take delivery, what is the process? I used to take delivery of a lot of gold and silver, even feeder cattle, which if you can imagine taking something that's alive and you got to feed and water during the delivery process. So these things aren't easy, but if it can be done within 72 hours, now you have this essence of a deliverable of an ETF, which is better than an ETF, because what it is a commercial futures market, which is viable. Now, one of the problems with CME now, which is becoming apparent, is it's not open 24/7 like the Bitcoin market is. So that's going to need to be addressed. But yeah, I still don't have it. Can you take delivery of the Backett certificates and have it in your own private wallet? And it looks like you can, but you're going to have to work through an exchange member like Interactive Brokers, and they don't have to do it. It's kind of like you're a good customer. Yeah, we'll do it for you.
I think maybe one of the reasons why they might not, I mean, wouldn't it be an awesome product if you could buy into you could take your pension, you could buy into a Bitcoin ETF, and then you could take physical delivery of the Bitcoin, but that would remove money from the pension system. So that would be a really fascinating product that would bring up all sorts of interesting challenges.
I think it's already there. We just don't know about it yet. I think that the other shoe's about ready to drop. I think they got it through. I think they got it through by writing it the way it is, and now it's through there. Now the next step is, okay, yeah, you can take physical delivery, but yeah, it's not going to be. It's not going to be an easy process, but it doesn't have to be easy as long as it's there.
I do want to throw more question. It's mostly to Ugly and John. And I think I brought up this question at Unconfiscatable when you guys were on the same panel. Like, is Bitcoin being a 24/7 market that is not going to change, going to eventually change all futures markets to be 24/7, starting with the Bitcoin CME contract, which is ridiculous that it's not 24/7 already.
It should. The market will demand it. I guarantee you, the biggest. I'm sure that the biggest lobby to regulate BitMEX are the CME members, because they realize they don't have anything that compete with the most advanced product out there. Nothing comes close. Even the competition. I'm trading on some of the other exchanges, and yeah, it's interesting, but I just really don't think people appreciate what Arthur Hayes and BitMEX has been able to do. They get nothing but crap. But hey, I've been around the block long enough. You know, they're really good at what they're doing, guys. They're really innovative.
John, what do you think about that? Though you might be frozen for some reason.
You can look, or you can like hold that face for a very long time.
Yeah.
This is a competition.
All right, Dinesh, what about you? I mean, do you have experience trading futures markets? And do you think these CME futures on Bitcoin will eventually force the CME to go 24/7 on the Bitcoin futures market, which in a way will eventually lead to all of their futures being 24/7?
So, yeah, I mean, we used to trade futures, and I think the CME futures should be 24/7. Like, I don't understand why they're not. Like, it just doesn't make sense. But all futures,
24/5. They're like 20. Actually, they're like 25/5.
25/5. Yeah.
Those are 23/5. Sorry, we don't have 25 hours in a day. I added an hour instead of taking one away. They're about 23/5 right now, but they should be 24/7.
Yeah, I mean, it will make the CME conform to the rest of the Bitcoin futures market and so on and so forth. Like, even with BitMEX, like, they're doing great things, and Binance is entering that market and so on and so forth. I don't know if it's enough for them to kind of turn all the rest of the futures on a 24/7 basis, mainly because the rest of the futures is still based on physical assets, like physical or equities or whatever, companies and that sort of thing. So I don't know if it's enough for it to conform, for CME to conform to the rest of the futures. But yeah, definitely on the Bitcoin futures, they should definitely be on the 24/7 market.
All right, John, you can just weigh in on that. And then I want to change gears a little bit to the S&P and maybe to the oil markets, and we'll transition nicely from Bitcoin to the S&P with the big question: how correlated is Bitcoin to the S&P? So floor is yours, John.
Okay, let me, hopefully you guys can hear me okay, Tone. I was just gonna share a screen real quick of that, because I thought this was interesting. Let me just pop this bad boy up. All right, let's see here. Boom, boom, boom. Okay. So Tone, if you guys can see me here. Okay. I thought this one was interesting, and I bet Evan, you and I have never seen vol like this, but Bitcoin volatility.
Sorry, John, we don't see a screen share. If you wanna, we don't see a screen share. You can also send me an image, and I can screen share it. You want to hit that little green briefcase and then choose your application or screen, or if you have a graphic, if you want to send that over to me on Telegram, I can screen share it from my end.
I'll do that. I'll shoot it over to you, Tone. Give me just 2 minutes to make that happen.
All right, cool. So I'll briefly mention the correlation between Bitcoin and the stock market, how I see it, and then other people can weigh in until John shoots over that graphic to me. Look, Bitcoin it will always be somewhat correlated to the equity market. From a macro perspective, they are both public. They are both private
Thank
assets.
you so much, Mary.
They're private assets versus being public assets. And I think Bitcoin benefited greatly from the giant boom market in equities and the boom market in the economy the last 10 years, which means a lot of people got richer, a lot of people had disposable income, and they were more willing to speculate on Bitcoin. In times of trouble like this, people panic and they want cash and they're scared. And that's why Bitcoin is correlated with the stock market. As stock markets crash, Bitcoin crashes. But what we saw last month is Bitcoin having a much higher beta than the S&P, probably a beta of 2 or 3, where Bitcoin fell twice as hard and twice as fast as the S&P. But Bitcoin had its capitulation, and which is why 2 weeks ago I said that if the S&P falls further to new lows, Bitcoin will not, because now I think Bitcoin will have a much smaller beta to the S&P 500, and it will start to behave more like a safe haven at this point, because now people are going to be starting thinking a little more rationally, and the big panic cycle is over as China and Asia and slowly Europe are going to get back, out of this Corona panic. So that's kind of my view on this situation. Anyone else want to jump in while I get that image from?
I've one question. I just actually had a friend text me from Europe. And if you want exposure to the market, to Bitcoin, and you're not an active trader in it, is the correlation to the traditional equities market necessarily bad? Should the average investor be worried about that? Is it something that should be on their mind?
I'll answer that real quick. It is still the most uncorrelated thing in your portfolio versus any other sector, any other equity, anything else in that portfolio. You have the S&P, you'll have gold, you'll have precious metals, you'll probably have some bonds, and even bonds have been generally correlated with the S&P, though we do have to separate government bonds and corporate bonds. So I think it's still a good diversification mechanism, even though it will, on a grand macro scale, be correlated.
Yeah, so Bitcoin has always performed when the world starts to, or pockets of people start to realize edge cases. So, the importance of owning your own money comes to life when people have challenges owning their own money, which is when you have, for example, in the past, bail-ins in Cyprus causes people to have a question whether they own their own money. When you have what I think is coming next, when people, during this coronavirus, I was restricted from withdrawing a certain amount of money that I wanted to be able to withdraw. And I had to go back on repeated occasions. And so as people start to experience those problems, they start to, that creates pockets of spikes as we've seen in the past. The other thing is obviously when people realize they can't spend their money as they choose. So the first highlight we had was obviously the WikiLeaks case when they were obviously, taken, barricaded from financial, and people start to question whether you can spend your money. Now, what I think we'll see in modern day times is all three of those things happening at once. So you'll have restrictions on you trying to access your cash. You'll have you realizing that if you try and send money to a Bitcoin exchange from your bank account, you might get pushed back. And so people realizing that their money is censored. And then at the same time, when you have what we're having right now, which is excessive money printing, excessive money creation, then people start to question. And so when you have all three of those at the same time as, the government's trying to prop up the stock markets again, people realizing that might not necessarily work this time, then you start to, I think you'll start to experience a decoupling in terms of the immediate effects that you'll start to see.
A couple of, sorry, just two thoughts on this. Number one, and don't get me wrong, I'm a huge maximalist, crypto maximalist in general. But like that whole narrative of like, you know, you own your own cash and you could spend it with Bitcoin and crypto and that sort of thing. Like that's a narrative that's been embedded for quite a while, but like nobody knows, the general market does not know how to spend Bitcoin or accept Bitcoin or do anything in that sense. Like if you look at it from like that whole ethos of like, oh, your keys, you own your cash, you can spend it all you want, no capital controls, et cetera, et cetera. Like that's fine, but like an average person cannot, and Simon, this is mostly just in response to what you just like, an average person cannot spend Bitcoin like mostly anywhere else sort of thing. It's very like, it's a niche product in that sense. Secondly, like I don't, and Tim, this is mostly just like in a response to the market stuff that we saw. I don't know how, and I was mostly disappointed with the whole, like, you know, crypto being more of a safe, Bitcoin Cash, etc., being more of a safe haven. But what we saw a couple of weeks ago was people going mostly to cash, right? Like people literally just withdrew everything, sent deposits onto exchange. And it's not, it's like people sent deposits, withdrew to fiat, either fiat stable or fiat, whatever it is, actual fiat. Which was a disappointing thing, which is like, you know, we all thought that we were in this industry to kind of make sure that we're the safe haven, we're, you know, allowing people to protect their wealth and protect themselves, et cetera, et cetera. But ultimately what happened was people just went back to cash, and that was a disappointing thing, so.
I have a question real quick. I'm sorry to interrupt you too. So I want to direct this. This is actually from a retired partner, one of Europe's largest private equity firms, and this just came in to me. And he asked me to get John's opinion on this. So I'll let you lead this off. My concern is that the monetization of the economic losses are going to lead to downgrades of the sovereign ratings, Italy being more obvious, but USA not excluded. They could further dent the confidence in traditional fiat money. Hence a look for alternative value storage like crypto potentially. Any thoughts on that?
You know, it's something that I think everybody on this panel has thought of, and it just hasn't happened to this point yet, Alex. There are some folks that avail themselves of that and that have used digital assets to move cross borders and all the rest without the same toll that normally occurs otherwise at a bank or elsewhere. But I think there are issues. Oh, thank you very much, Tone. Tone's putting up a quick one, and
yeah, well,
all I really
answer that question first, and then we'll get into this.
Okay, I think, Alex, that we'd all like to see that. I don't know that there's anywhere near enough buy-in already from traditional that would allow it. In other words, I think here and there you will see people that'll do exactly as you sort of your thesis there would be. Well, if the Fed's going to make my money worth less and less, not worthless, but worth less, why wouldn't I have something like a digital asset like Bitcoin instead of fiat currency? And like I say, I just don't believe there's been enough buy-in. I think the buy-in number has been so small so far that until we see significant buy-in, just not happening.
Thank you for that. I just want to caveat that with the fact that I'm just happy that questions like this, when it has to do with monetary policy and currency, is being asked by people who are sitting on the traditional side of the fence and are curious about how this could possibly disrupt the common marketplace.
Yeah,
right.
I don't think you can
Well,
trust the credit rating. So we saw that during the financial crisis, that the credit ratings weren't really independent. They were used as a tool in order to perpetuate the selling of financial products. So I don't think that there is an independent party that is in a position to attach a credit rating to the US government ability to, at the moment, that can do that in an independent way. If it's done by a foreign agency, then it will be for political reasons. If it's done by a US agency, it will be done for political reasons and the pressure that they will experience. I don't think you can trust the independence of the ratings agencies. And we saw that during 2008 in the fight.
Sure.
Totally agree. Credit
Great
ratings,
point.
it's a political question. Answer.
Yep. I agree. You guys, I just wanted to share this, not as much with the speakers as with the audience. And so thank you for getting it up there, Tone, so quickly. This was just Bitcoin volatility, and the numbers that you guys see on the screen, of course, it spiked dramatically during the time frame of the sell-off, which is not surprising. That's the same thing with the S&P 500. You know, we were at 15, moving towards 20 in the S&P 500 as far as a percentage, the VIX percentage. This graph, I didn't have it in that same quantity, or that same, I couldn't compare apples to apples, so I had to basically put it into volatility terms that we use when we do talk about the S&P, which right now is somewhere around 55 vol for the S&P 500. And as you can see, the 60-day vol for the for Bitcoin right now is up to 128. The 30-day, which takes into account, obviously weighted much more heavily with what has just happened, 176. There have been times in late 2018 when the volatility of the S&P actually surpassed Bitcoin. But right now, given the magnitude of the sell-off of both assets, there was far more volatility in Bitcoin than there was in S&P 500. In other words, not quite triple for the 60-day, but certainly a very high reading for Bitcoin volatility right now, which, to ugly old goat's point, those do usually create some pretty nice opportunities. And I think that's exactly, you know, the breakout that Tone was talking about, that he was saying, hey, if we can break out of this on your charts, Tone, that's all I needed to show of mine, really. But I think that particular breakout, if it does occur, and feels like it might be, would likely be because of that, you know, tossing the baby out with the bathwater, that kind of whoosh that we look for either at market tops or bottoms. You know, how long that stays in place is anybody's guess, but it's certainly, as a guy who follows volatility, and I'm sure Simon and Evan and a bunch of you guys, Dinesh, follow volatility pretty closely too. I think that says a lot about where we are right now in Bitcoin.
Hey, John, I wanna stay with you, and I want to talk about the traditional markets a little bit. And like, what do you think we're headed? Do you think we bottomed? Like, I mean, I live and breathe the Bitcoin markets for the last 6 years, and I'm pretty confident that Bitcoin has bottomed, but I'm not sure about the S&P yet. And there were recently very good, interesting charts. So one of them is this one. I can easily do an update to this because the S&P market bounced over 20% over that week right before this graphic was taken. And it's being compared to two potential prior similar crashes, one being the 1929 and one being 1987, because we can all agree that this is not exactly the dot-com bubble and this is not exactly the 2008 financial crisis. And we're not at either of these. And I really do think we're somewhere where basically we are dealing with a 1987 style panic. But if we don't get out of this very quick, it could turn into a 1929 style depression with this 30% unemployment. So for now, I'm still going to assume that we are on the trajectory of the 1987 crash. This was a presentation that I did back in 2016, which was actually kind of funny. I did this presentation at the Anarchist conference. That's all about, you know, stocks are going to crash, and you have to buy gold, And the speaker before me was George, Griffin. What's his first name? The guy that wrote the book, Creature from Jekyll Island? G. Edward Griffin. G. Edward Griffin. There it is. And he was the speaker that was on right before me. And he was like the keynote first speaker of the day, and I was the second speaker. And I literally started my presentation with the following. Look, I don't have the credentials as my prior speaker that wrote the book about the Fed, which to me was a little bit more conspiracy theory than fact. But here is what the market has done since the creation of the Fed. And I did a whole presentation about how your gold isn't going to go very far, but the Dow Jones will probably go to 100,000. And we're talking back in like 2016, when we were sitting here at 16,000, and we ended up doubling since that presentation. And to me, this sharp drop still feels like this 1987 little blimp that we recovered within 2 years. I still don't see this monster of 1929 on the horizon. That's my personal view at the moment. Going back to these two charts real quick, this is a 3-day chart in 1929. This is a daily chart in 1987. I don't know if we're gonna dip below and make a new low, but I still think that we're gonna draw this out into maybe as long as May, but I'm still anticipating a quick-ish recovery for new all-time highs in the stock market by, say, 2022, 2023. What do you think? Where do you think this is headed, John? And then we'll get everybody else's take as well.
Sure. I don't know that I think we would have retested the low were it not for the massive amounts of stimulus that both the Congress and the Fed have applied, Tone. And time will tell. I think the fact that they have applied that much to the market may mean that we don't get all the way down and retest those lows, even though the lows really are not that far from where we are. Nonetheless, especially if the Fed has $4 trillion that is going to be leveraged as far as how they could leverage the delivery of that $4 trillion. I think that now that doesn't mean that I'm thinking it has to be like this, might be more like this. And this is a very slow angle for a while. But I think as the infections peak and because we all know this is about one thing right now. This is all about Corona. So as the infections peak, as the mortality rate in the United States, if we stay at 1% or lower, rather than the 3% to 8% to 10% that some of the other regions have had, I think we will get back to a much better market condition. I think volatility will probably start drifting back down into the 20s as that happens. But right now, Tone, to your point, when I look at volatility, and these guys on here with me know an awful lot about volatility, when we see that bell-shaped graph of the expected outcomes, and you get into the 4th and 5th standard deviation, you're out there in the 95th percentile, 97th percentile of occurrences. And to me, that has always been a signal for either a top or a bottom. And the fact that we got out there when volatility sprang up into the 80s tells me we may have seen that bottom. And then you throw in the stimulus on top of it. But I'll shut up and let the other speakers opine.
Yeah, I want to just jump in real quick. Okay, look, let's be honest about these insane unemployment numbers and unemployment filing. Okay, right now, everybody and their mother filing for unemployment because government wants to give away money. Okay, these are going to be inflated unemployment numbers. They are not realistic. If I wasn't too busy working right now, like doing 2 videos a day and trading in the middle of the day, I'd be filing for unemployment too, okay? I'm just too lazy to fill out that paperwork. But the majority of the people are not. They are going to do it. And while, yes, a shit ton of small businesses are going to fail, I can see if Trump gets reelected, I can see him dropping regulation on small businesses. And there was a lot of people that probably wanted to open small businesses, but they said, you know what? There's too many shoe repair shops around me. There's too many restaurants around me, okay? I think a lot of businesses are going to pop up. I think a lot of people have been waiting for their competition, small or big, to get into trouble so they can get back in. And everyone is now filing for unemployment because the government is too busy, filing through our paperwork. They just want to give you money.
Yeah, and who has all the assets now? I'm really bullish on Bitcoin entrepreneurs. We're gonna solve a lot of these problems, guys. I believe in the Bitcoin standard, and these guys are hodling. It's going to pay off. We just went through the 2-week highs today, which, the way I measure trend, the trend's always been down till just now while we're having this conversation. And now the trend has turned up. If we get over 7, we go to 9,000, everybody's going to be bullish again, and then of course we'll probably sell off. But there's a big difference between this market and the January of 2019 when we were back at 3,500. And that is, the market was not volatile then. It was very, very quiet. That was a very healthy, move. We were in backwardization, and then we slowly crept up and we broke out, not only on a weekly, but a monthly and a quarterly. Boom, we had that big run up into the summer. We went into a great hedgers market where, the speculative interest was on fire, and we went into a great big contango. And so any miner worth of salt knew what they were doing, hedged at least enough of their production so they weren't worried about making money the rest of the year, and they did not get hurt on this collapse. The guys that got wiped out were people that were over speculating and over leveraged. So that's one of the differences that makes this market very difficult, because it could be that kind of a bottom. But the problem is high volatility usually comes at tops, not at bottoms. So I've been bullish. I'm long for on this rally. The first time I'm giving a little bit back. It's time to trim. That's where I'm at right now, and that's not saying that this thing's probably going to take out last month's highs, which is way up there at 9,000. But then what are we going to do? So the whole thing is, you just have to think in a new and different way. And you guys that are hodlers out there, look for opportunities. The goat lady, hey, guess what? We're going to make 4,000 masks today. Can you believe that? If GM hasn't made 50,000 yet, we've almost made 50,000 masks. I got 14 people working out of my garage. So how are things bad at all? Nobody's sick here. Mexico hasn't shut down. They realize, hey, people have to work. They're taking a very sane approach down here on this thing. They haven't gone crazy like the rest of the world. And, think about where we were, the psychology. That's what scares me the most. You have conservatives who would have never gone for this crazy bailout 2 or 3 weeks ago, and they're on board. Everybody's on board of this thing. Well, you know what? Everybody's wrong. And if you're a hodler, we have great opportunities ahead of us. You should be really excited, and just unbelievable.
I should give you my address. Should send some my way. So I have one of these. So this separates. So this is.
Wow.
But it's not a proper mask. I mean, it helps.
All mask tone.
I'm waiting. So this is how I this is how I leave the house with one of these. And I'm waiting for a full gas mask. It's in the mail. Should be here this week.
Cool. Hey, I got to go to the dentist. I got a real bad tooth, but I really enjoyed getting on, guys. And please, I'd love to find out, somebody finds an answer to that Beckett situation, if that thing's a deliverable contract, because I think it is, it's just not public knowledge yet. And when that shoe drops, that's going to be your ETF in my mind. Because now
you talking about the bot contracts?
Yeah.
Yeah, they're physically delivered.
They're physical delivery.
Physically.
To your private wallet.
Yep.
Okay. That's the whole thing that I wanted to, okay.
Yeah,
How long, what is the mechanism? How many hours does it take to the point that I give a notice to delivery to the time that Bitcoin shows up in my private wallet?
That's actually a great question, and I do not know the answer to, because we haven't had a hedge fund take a physical delivery of one yet. But I'm also aware that there is a process in between that expiration and hitting your wallet.
Yeah, and that's what I'm looking for. I'm just really interested. Wow, that's extremely bullish for Bitcoin. Extremely bullish. And I've said that all along. It looks to me like it's a deliverable contract. It was brilliant the way they got it through. I mean, they got it through by not making it obviously deliverable. And it was real. I mean, they were really smart. Whoever thought of that one said, okay, because if you're familiar with the market, you know what's going on. The regulators are the last one. People don't understand that. The CFTC, all those regulators put in there by the exchange members. And that's, in my mind, that's why the CFTC is going after, Arthur Hayes with both fists. And so far, I'm rooting for Arthur. And CFTC is one of the best regulatory agencies out there of all of them. But, look, it was without regulation that created all. Now we had all kinds of problems. We had all these. I was a victim of a lot of exchanges that went under. But look at the innovation that occurred without the regulation, guys. BitMEX is super fantastic hedging vehicle. No matter, it's just incredible. I'll leave it there. I got to go. I got a sore tooth. So
yeah, on the original question, thanks, Ugly. I think we are in more of a 1929 market than a 1987 market. Personally, I think this is unprecedented in terms of. So 1987 was simply a stock market crash and the shock that comes from it. I don't think we've ever been in a scenario where we have this. So obviously in 1929, the issue was leverage. The leverage right now is, nothing compared to what we had in 1929. The only thing that makes me think that the stock market might be able to recover is that for the first time in human history, we're in an environment whereby governments will not let stock markets crash. So we haven't really been in that type of environment where governments are willing to do anything to prop up the market like they have for the last decade since the financial crisis. We entered the 2008 crisis because we were too leveraged, and the solution that we put to it was leveraging 10, 20, 30 times more now. And so really the only thing that makes me think that we could enter into a normal market condition after an extended correction is the fact that governments, again, are willing to take the Ponzi scheme right to the end, right to the bitter end, where they chuck the entire financial system, every financial product, interest rates to zero, everything that they've got, they're chucking at it to keep the stock markets up. Eventually, that has an impact and that has an effect. And I do think that they've still got another round of financial engineering using digital currencies at the central bank level in order to try and prop up the stock markets to all-time highs again. And so I do think that we will see that return just simply because the government have just shown that they're not really willing to let free markets prevail. They will intervene at all costs and at all expense. And I think they will, the health crisis was just an example of having to do that, really. And I think they'll keep that into the financial markets. But I do think that there will be some really big costs that come from this one, and that is the impact that it has on freedom, privacy, and many of the things that Bitcoin and the Bitcoin community has set out to solve. But yeah, I don't see it as an 87 market. I see it more as a 29 market.
No, I agree, and I think like going back to there's a question. It's like I think we're yet to experience a hangover. I think the hangover is going to come soon enough because right now, again, we're just plugging the holes of stuff that has happened over the last 10 years, a free kind of like free market that everybody got bailed out 2008, 2009. Everybody picked up the pieces, everybody went on the party, and now it just had to blow off top. I think what we will experience over the next few years is the actual hangover, which will be very interesting to see. And it'll be interesting to see how that kind of pertains to what we're proponents of versus what, if there is a decoupling, or if there isn't, if we actually think that, it is a safe haven, if it isn't, it's an interesting time. It's an interesting time mainly because, as you said, like there's like free money printers, and we'll see if that kind of sustains any of this. This could be, and again, to Tone's question, is like on the traditional markets, I think it's a dead cat bounce because bailouts can only go so far, and things will only, retain themselves for so much until coming back again, until people realize that as lockdowns. So, for example, in the UK, I think they're saying the lockdown will happen for another couple of months. Spain's already extended it. Italy's already extended it.
Okay.
Netherlands, I know Netherlands extended it.
Yeah, Netherlands extended it, and Italy, and Easter is like a big weekend, which is I think this weekend here, and the effects of that are going to be felt like months after, sort of thing. So I think the bounce right now is more of like a dead cat, as people call it. And when they realize that, most businesses will realize revenue.
Sleep deprivation. On a more important note, Tone is on another bottle. I love it. It's a different bottle now, but
yeah, like given that those sort of effects will be felt, I think it's more of a dead cat bounce in the traditional markets, which is probably positive for the crypto markets in the near short term, sort of thing.
Yeah, just adding on to that real quick. I mean, leveraging some of my past experience as a fundamental equities analyst, I think, while some of the macro strategists at the larger broker dealers have been publishing revised GDP estimates, kind of taking down from a top-down perspective some of the growth expectations for the S&P this year. I think on an individual stock level basis, that's only starting, and that process will take a while to get digested by the market, especially since a lot of these companies have actually withdrawn guidance or just said it's really difficult to estimate the demand impact because we don't even know, as you guys have said, how long we're going to be isolated for, whether on a national or international basis. So I think maybe looping back to one of the reasons I am more comparatively bullish on crypto and Bitcoin versus traditional assets is this overhang doesn't quite exist for crypto because it's there is a lack of fundamentals in like the stock kind of cash flow perspective. And I think that's also one of the reasons I, along with others, believe, whenever the bottom is, I do think, Bitcoin bottoms first compared to the S&P, but that plus the decoupling from an idiosyncratic basis around the halving, et cetera, I think does make the setup more favorable. But that's just kind of me talking my book, or a book that's probably similar to a lot of other people's view here. So I would discount it by that. But at the same time, I think individuals should think through some of the dynamics I just mentioned. So I 100% agree. I think there's more downside in traditional markets from a.
I think there's, sorry, and this is like me thinking through, like, just like while you were saying anything, Evan, there is peripheral impact to crypto markets, especially around the Bitcoin side, is you still need proof of work to work, and that depends on traditional electricity, that depends on manpower and that sort of thing. So there will be some sort of effect, but not inherently directly, sort of thing.
And at the same time, and I want to direct this to Evan and George, as the calamities are going on and different things with the market, Evan, what conversations are you having or feedback is coming from your investors, your LPs? And same question to George in regards to, I know George knows a lot of people on the traditional side and high net worth side. What are they saying about why they may want to get in or may want to get out or are going to stay and hold in Bitcoin?
Yeah, I think across people that are active managers in the space, and I talked to a couple other buy-siders that you guys probably know too, it really depends on a fund by fund basis, kind of the constituency of your LP base. But I think trying to generalize a bit, people that are funded by more kind of friends and family or family offices are probably able to, especially if they've been proactive with sending out kind of updates as we've weathered the volatility. I think generally people that are longer, have been investors for a longer time, kind of understand the territory and the volatility that comes with the territory, especially with the kind of correlations going to one as everyone has been selling off assets and going to cash. I think that's well understood. I would say if managers are kind of reaffirming or reexamining the fundamental longer term thesis for Bitcoin, especially against some of the money printing and inflation driving actions we've seen, those are all still intact. I think so I guess as a result, so long as you've been honest with them about sort of the medium to longer term view and that's sort of your ultimate thesis, managing risk is something that's kind of being measured on a more individual fund level basis. So I think overall, probably investors that are comfortable with the exposures to this space, understand that drawdowns like this, especially in a market where leverage is easily sought and positions are easily put on kind of, and then having to be taken off. I think that overall is something that people understood. I mean, we've seen some public examples of crypto hedge funds kind of blowing up and winding down, but I will be honest, like that's actually, I haven't seen as many as I thought given the move. So that data point probably suggests to me
I find it not to be, I thought it was going to be more as well, Evan.
Yeah, I think it's more market makers and people that maybe were not able to unload risk as they were kind of middlemen. But I think from like the active management side, I haven't seen as many wind downs as I would have thought, but maybe then again, it's a survivorship bias.
The institutional sector is just not as big, I think, for us to have this kind of a wave of foreclosures in a way. So, I mean, from my perspective, I mean, to answer your question, Alex, there's the reasons for staying in are absolutely the same. Nothing really changed. The reason for getting out is basically we've seen the panic selling. That's the only reason to get out. And we had seen exactly the panic sort of activity in the market. But I've spoken to a number of people that are actually looking to get in, surprisingly during this unstable times. And I was speaking to one entrepreneur that was running a charter plane business, and his story is pretty straightforward, right? So he's the bank is holding money for any sort of credit card payments for 60 days is something that he cannot afford. So a very simple solution for him to get into the crypto, and some of his clients are paying in crypto, and he's happily adopts this. So this is how things are evolving. So again, it's nothing really different from what's been happening before, but I think the overall situation at the moment will allow to have more people open their eyes and look outside of the sort of a mainstream finance, look at what's happening in the digital asset space and the crypto and how that has evolved over time, and bring more attention, bring more adoption into the space. But I feel like, I mean, we've been very busy in the last month or so, right? So it's definitely a positive for our industry, but we're hoping to help other small businesses to strive using the tools we have, and cross-border payments, these type of or general payment cases are very good ones to bring up when how the industry is actually helping the general economies to survive or grow.
No, very, very true. And one last thing I want to bring up that's in relevant news, and this is going to be for you, John, is with the market makers in Chicago. There's two, I guess, now that have gone bust, have been blown out on volatility days. I mean, what's your reaction to that? Is that like shock and awe for you, or are you just like, hey, we saw that coming and there shouldn't have been overexposure?
Believe it or not, Alex, at least as far as I'm aware, those market making groups that got hurt because when they moved from when they shut down the trading floors, they did not have a mechanism in place for the traders to be able to do certain trades, which was a real problem. So without getting too esoteric about it, the traders had trades on, for instance, in the VIX pit against the S&P pit over at the Merc, a futures trade against an equities trade. And the VIX, which of course is primarily traded at the CBOE, the exposure that people had when they disconnected, when they shut down both those floors. Both of them were shut down, I want to say like the 21st of March or something like that, Alex. And when they were shut down, they didn't have a mechanism to do electronically what the traders have always done since the beginning of trading in the VIX and since the S&P 500 was open, and that was to be able to arbitrage it and use the basically brokers in the pit. When they took the brokers out of the pit, they had to actually pass rules after the fact to allow the brokers to do what they'd always done on the floor that they could no longer do from upstairs. And I knew of one group like that, Alex. I haven't heard of the second group, but that one was Ronin.
Wasn't one of them the fourth largest market maker on the floor?
Oh yeah, Ronin backs an awful lot of traders, had anywhere between 500 million and $1 billion in leveraged trades that they could, obviously leverage that up pretty significantly. I don't know exactly what the final tally was, but I know that there's going to be a lot of lawsuits over whatever did happen when they, again, elected to shut down those floors, which I thought would exacerbate volatility, but also then until they put in that mechanism to allow them to trade as they had done from the floor upstairs, that was another nightmare.
I want to go to Simon on this next one real quick. One Simon, I've been getting a lot of praise offline on your commentaries. So people are finding them very insightful. But you hear a lot in the US on the bailouts and what we're doing for the airlines and Boeing and other different sectors. We don't hear a lot of stuff like that going on in Europe. And is there stuff with you being over there? Is there stuff happening in Europe proactively towards the market to support the EU? And two, if that is the case or isn't the case, what do you see happening with the EU? Some people say, hey, the EU might just blow up from here if it doesn't get handled. What are your thoughts on that?
Yeah, we are seeing a lot of bailouts and similar situations. So governments all around the world are really, there were different countries that took it at different levels of seriousness. And I think it caught many of our leaders off guard. One of the things that I found a little bit frustrating is, as a Bitcoiner, you often get libertarian ideals, thrown, because it was a libertarian movement. But for me, this calls into question, for me, this is exactly what governments are for. And the reality is that the libertarian ideal meant that people were going out and spreading the infection, and it did need government intervention. And I've been getting a lot of criticism from the Bitcoin community for my thoughts on that as I've been sharing them. But yeah, governments all around the world have been doing similar things. You know, in the case, I'm on a little island. We have 85,000 people. We've had 68 cases. But if you actually take that as, you know, cases per 1 million population, it's actually quite high. We had our first death. I haven't actually got the government statistics, but it's a lot easier to control 85,000 people and put together policy to get the economy back on track. But, you know, some of the things that we've seen in other parts of Europe, I think, you know, in Italy, in Spain, you know, I was actually in the process of doing lots of trade, not trades, actual, you know, delivery and supply chains of with Spain and Italy at the moment. And, you know, it's really been heartbreaking to see some of the suppliers that we're dealing with, actually how they've been affected by this crisis. It's actually been, you know, the level of anxiety that people have been experiencing. I think in the States, you know, the reaction was a little bit slower because in general, it comes from a culture of, you know, freedom and libertarianism, and that type of culture meant that, you know, the people react stronger to, you know, such an unprecedented time of what to many people feels like a real breach of their personal human rights as a result of this. But I think really Europe is a failed experiment. There is no United States of Europe here. It's just a bunch of countries looking out for themselves at the moment. And everyone's just trying to, you know, as the borders have all been closed and all the planes are on shutdown, everyone's concentrating on their own scenarios. I don't think anyone's looking at the, you know, it's kind of ironic with the amount of debate that was happening prior to this around Brexit and all that type of stuff and those words. You know, it kind of feels like that having more independence in the current environment in Europe is actually something that can act more favorably to you. So, you know, it's there is a lot going on everywhere in the world. Like what's happening in the United States is happening everywhere else. So at the moment, like in the case of the UK, like Boris Johnson, who's got coronavirus now, prior to that, he committed to essentially underwriting 80% of all businesses' revenue, and then also going through the, you know, the individual, how they're going to deal with all the freelancers, all the contractors, all the people that are outside of the country that want to come back in, that can't come back in. You know, the level of government support that has been required to keep everybody in and try and control this is just like unprecedented globally. So yeah, we're seeing a lot of that. But then there's the countries that we're not seeing much from. You know, and the real challenge with this is that I think we've just passed 1 million cases and 50,000 deaths globally. And those numbers are completely off what the reality of this situation is, because the reality is that there's a lot of countries that just aren't testing, that aren't reporting. The reality is that this is, you know, a really, really unfortunate situation globally. And the reports that we're getting are completely underestimating, you know, how many people are in Italy right now that are actually just, you know, passed away in their home, that are not part of those statistics. You know, I personally haven't been able to get a test. You know, I just haven't been able. It's not something that crossed my mind. I think many people that I'm speaking with, they've been, you know, they feel like they've got something, but they haven't just been having these tests at the moment. So it really is a very tragic time in human history, I think.
Hey, Simon. So I have gotten questions because I am streaming multiple times a day. Tone, do you know anyone that has gotten coronavirus? And my answer is yes. Ganesh, you want to say something here?
Yeah, I mean, yeah, see, I'm probably like, this is the thing.
I knew you were getting called out.
Oh, yeah, dude. People are like, oh, do you know anybody who's actually got the corona? I'm like, yep, that's this guy. It's actually like weirdly, whoever's like, oh, it's all made up or whatever, it's really not. Like it's, yeah, I contracted symptoms starting Thursday of last week. which I believe was, what was Thursday of last week? Let me see.
After meeting with Roger Ver,
Basically, Roger and I shook hands. And actually, funnily enough, George, Roger.
Yeah, have you been in contact with a lot of people from Bitcoin.com?
Yeah, we self-quarantine. It's great.
Systemic market risk right there.
George and Roger on Tuesday last week. So George, hopefully you're staying safe and sound, and you can
Stay
taste
safe.
you're drinking, which is good.
Well, you're drinking, so you're allowed to drink whiskey while I'm on.
Well, it tastes like nothing. So like over the weekend, I just continued drinking all day, and it was just like, oh, I'm just drinking water.
So you lost all like sense of taste and smell?
Yeah, so I started exhibiting symptoms on Friday morning where I woke up and brushed my teeth. I'm like, this is weird. Can't really taste anything. Mouthwash, nothing. And for the entire day, I did like a taste test and can't taste anything, can't smell anything. 2 days later, I had like chest cough, but that's mostly it. But most of it is just like, yeah, I can't smell or taste or do anything, which is kind of like weird. My girlfriend, on the other hand, has more of the flu-like symptoms. So that's more chest tightness, like the traditional flu symptoms. But myself, like I'm physically okay, like so I'm fine, but I can't like taste this whiskey that's going in. So I'm drinking cheap whiskey right now, which is
people in the live show are upset that I'm laughing, but that's you and I have been chatting about this for a few days now.
There's nothing to be upset about at all. There's like nothing to be upset about
at this point. Yeah.
Obviously, I don't want to trivialize, the effects of Corona, and I don't want to at all like kind of put it, minimalize it at all. I know it's really bad, but as a person that's going through it, I think like if I take it too seriously, it's just kind of like weird. Like it's kind of like, yeah, this is like
gonna help. It's not gonna help your condition.
Exactly, right? This is kind of like a bad hangover. I went on a rave for like a very long time, and now I can't taste anything. So it's kind of like that.
But you were tested, and you were found positive of it.
No, I wasn't tested because like in the UK, I don't want to go in.
It's impossible to get tested in UK. Impossible.
So overloaded with anything, and I just don't want to be that person. Be like, oh hey, guess what? I'm coughing. Can you test me? Like I don't want to be the person that kind of becomes that asshole. But no, I haven't given tested. I think it's more once it's over, you want to get the antibody test that makes sure that you're done with it, sort of thing. But once you have it, you don't want to get tested. It's like
so how are you absolutely sure that you have it?
Loss of taste, loss of smell, the chest cough, like the dry coughs, and the body soreness, which are all symptoms of like Corona, as they say it, essentially.
I actually didn't know loss of taste and smell. That I was expecting. I know it's like problems breathing because it's definitely affects your lungs. I didn't know the smell and the taste that you lose those. That was new to me when you told me a few days ago.
Yeah, no, it's a weird thing because like it's not just like, oh, you've got a bad hangover, you drank too much, you can't taste anything. It's actually like I did a taste test. I've taken a spoon of horseradish sauce, mustard, hot sauce, biting a clove of garlic, and I did the entire thing. My insides were just like, what the fuck are you doing to me? But like it was like, yeah, it's fine. Like we can't taste anything. And that's when I knew like something's definitely not cool. So
wow. No, I hope you get those back. The kind of useful senses there.
Yeah, it would suck. Otherwise, it's gonna be like cheap whiskey for the rest of my life. I'm not gonna ever pay for like expensive whiskey or expensive wine.
At that point, yeah.
Yeah.
All right. Hey, Simon. So going back to you, I do agree that the U.S. and the Federal Reserve and the fact that we have one currency in America and we have one currency in Europe too, but the fact that we have like one language, one culture, and a unified debt across all the states allows the Federal Reserve to deal with the situation a lot better. Now, it's better for the Federal Reserve with their intense money printing, but I don't see it causing inflation in the US anytime soon because more than $2 trillion have probably been wiped out by the shutdown of the economy. But Europe, I believe, is in serious trouble. I think the UK is getting out in the right time because I think the euro common currency is in serious danger. And another thing I've been saying for years now, at least 5 years since I've been in the space, the breakup of the euro common currency will be one of the bullish things in Bitcoin ever. I think that is going to drive insane mass adoption, because if you're in Italy or Spain or Greece and the euro common currency is breaking up, you're going to try to convert those euros into something more trustworthy than your local new fiat currency. And Bitcoin becomes a huge safe haven for the Greeks and the Italians before the lira and the drachma come back. What do you think?
Yeah, and certainly, I mean, Britain was a really strange one, why they were the ones to do Brexit, because Britain actually had the best deal out of everybody. They got to maintain their own currency and their own central bank, and have all the benefits of Europe. So of all the countries to do Brexit, Britain was the weirdest one. The part that I've always hated about Europe is I think it's suicide for a country to put themselves under the control of a central bank that is not, culturally, their own country. It's just, there's the experiment of, I get the theory of United States of America feeling like one country with a state system, but, borders, water, cultures, wars, languages, just never led to the unification, and especially at the crisis level. But the bit, the free trade and all that stuff was all really good positive things, which Britain actually had. But then they maintained the bit that everyone else is stuck under the European Central Bank, which is a really, really suicidal thing for your country to do, especially in times when you need to use the balance sheet of the central bank in times like this. So it's really quite scary being under the power of the European Central Bank in times like this. It's a bit of a weird one. So I'm in the Isle of Man, which is, we're kind of dependent upon the Bank of England. So Isle of Man was the first country to try and support Bitcoin as a government. And there was a conference in 2014 where it was trying to allow people to pay their taxes in Bitcoin and create a small little island to stimulate the economy and create new jobs through creating a Bitcoin infrastructure. But one of the things that actually happened is that the Isle of Man government got essentially a call from the Bank of England saying, if you support the Bitcoin community, we will remove clearing for your island. What I tried to tell them is that you can actually use a stable coin. You can have all the benefits of digital currency. You can have the backing of the pound, and you can just create your own version. They print their own cash and coins so that they're not dependent upon that. But I know what it's like to have dependency. So in the case of the Isle of Man, it's actually illegal for the government to take on debt. So we have to produce enough tax in order for the government to meet its obligations. And at the moment, it's eating into its national insurance contributions in order to support businesses in this time, because it's going to be, it's going to have seriously negative effects on commerce at the moment. So I know what it's like when you need to rely upon another central bank, but then that's at the tiny scale. It's so much easier to manage a small community than it is, 350 million people or even India's the one that really scares me, the 1.3 billion people there. That really does trouble me. But yeah, so the European, in terms of will Bitcoin benefit, it's troubling for me to say. And one of the challenges with the Bitcoin community is that the Bitcoin community think that they benefit from a collapse of the financial system. But the cold hard reality is that the financial system does need to operate and continue as usual, because the financial system is our grandma, it's our mother, it's our sister, it's our brother, and to think that in order for our Bitcoin investment to succeed, we need everyone to get hurt like that, it's just a silly thought. But what Bitcoin does do is, I believe, by giving people a choice where they can exit into a system that works outside of that system, is that it keeps the competition in a way whereby, the governments do need to create better fiat currencies. They do need to do better things. They do need to have better policies. And by having choice, I think that only enhances that. But to want the financial system to collapse so that the price of your Bitcoin goes up. One is just a really bad thing for society. And secondly, it probably won't work out that way, because as people are struggling for finances, then they also struggle to acquire Bitcoin.
Yeah, no, I'm with you. I've been saying the same thing about the gold bugs. Like, they want the economy to crash and all their relatives to lose their jobs so that their gold may go up, which it probably won't anyway. We got to say goodbye to Evan. Evan, thanks for joining us. Some final thoughts. Go ahead, remind. We still have 1,000 viewers. So maybe do like an intro as your outro, so people know who you are as you head off, and floor is yours.
Yeah, thanks again, Tone and Alex and everybody else for having me on. It's been a pleasure hearing your thoughts and sharing mine as well. Once again, I'm Evan Fung of Tapestry Capital. Used to be in traditional finance. Hopefully the viewers don't hold that against me, but I guess in closing, I'm really excited about where this space is going. I think every year we all think and hope that it could be going a little faster, but I've never really seen the setup in terms of some of the macro and micro factors that should really make it a lot easier for people to both access and learn about Bitcoin, and hopefully make the decision to own a little bit as kind of a hedge against all the things that we've been talking about. Ideally, I would have wished that it didn't take a global pandemic where people were locked up at home to have the time to read the white paper. But we'll have to kind of see how things work out, and hopefully it's kind of to the benefit of the community and the asset class as a whole. And I guess the last thing I would say is for the viewers that are also kind of working as part of the system, like I used to be, in traditional finance on Wall Street, et cetera, there's always ways to kind of fight the man, so to speak. You don't necessarily have to jump in with both feet full time, but whether it's reaching out to people like some of the panelists to just learn more, or doing your own part to hodl a little bit of Bitcoin after you've done your own research. I think, there are ways to kind of make the system better, separate from the existing, machinations and behemoths that currently exist within the legacy world. So I think that's a good note to end on. And thanks again, guys, for the time.
Evan, thank you very much. Appreciate the time.
Have a good one.
Thank you. Nice to meet you.
All right. Any other topics? Do we have any questions? I know we have like a bunch of questions coming in. We haven't really been focusing on them. I got a few. One of them was actually for Jon. Jon, now that you've come back, let me just grab that question real quick, because it has to do with both options and Bitcoin. Does Market Rebellion identify opportunities in crypto with their Heat Seeker product? They are looking where they look for unusual option activity. How do you identify those? I mean, there's really not that much option activity in Bitcoin. All we have is Ledger X and Deribit. Deribit is in a little bit of that regulatory gray zone, and Ledger X is on the right side of the regulatory landscape, but I don't know how much volume they have, because the retail side of crypto.
Ledger X sources liquidity from Deribit, by the way.
Oh, which they do. Oh, interesting.
Yeah.
I got to start. I'm an options trader. I'm in so many spreads right now. By the way, does anyone have any thoughts on Tesla? Because I have a spread on Tesla, which goes to shit if it drops $5 more below 450 bucks. And I'm a little concerned about my trade going into overnight here.
I hear it's going to 420.
Yeah, I would not be playing Tesla right now. But
Damn it. I can't believe it fell $30 today. On a day that the market is up. Like, I really needed Tesla to hold 450. I don't want to exit the spread right now. Damn it.
Can't help you there, Tone. We don't have any unusual activity in Tesla. But to either side, bullish or bearish. But to your point, with options, no, we don't. We are applying our algorithm to blocks of BTC and Ethereum, but again, everybody knows, it's not the most trustworthy data. Let me put it that way. So if I knew every one of these trades was real, it would be far easier to say, yeah, we've got a strong buy signal, a strong sell signal. As more and more of these crappy exchanges that are doing the planned games go away, it'll be better for all of us.
Let me ask you something. In the traditional markets, do people know what? So the people that are getting into crypto right now, do they know the difference between Bitcoin and Ethereum?
They do, but I'd say that Simon, they're not, as versed as this group or most of your viewers at all. They do know that there's decentralized and there are smart contracts like Ethereum that have been created to help with projects, among other things. But I think an awful lot of them are just getting their toe in the water, and it's going to require a lot more ease of entry for a broader market to get into this.
But do you think they see it as like Ethereum is a cheaper version of Bitcoin, or do you think they fundamentally see that there is something really different between these two things?
I think you're right. They probably just think of it as a cheaper version of Bitcoin rather than a completely separate contract, a completely separate asset altogether. It's a good question, Simon.
It's a hard.
Can you hold that for a second?
Concept to grasp from a traditional markets perspective. When somebody introduced me to like the Ethereum smart contract situation, this was like when I was like trading like long short equities and that sort of thing. Somebody said, "Hey, you should put in." I remember when the ICO was happening, I put something in. It was like one BTC at like $200 or $300. They gave you 2,000 Ethereum. Right at that point, ETH was valued at like $1 or less than that, or whatever it was, or less than $1. But like the idea of like, smart contracts does not resonate with like traditional investors. Like nobody knows that you're going to invest in a platform that is the decentralized web, that has smart contract, that has oracles. Like the concept of oracles is like completely, nobody knows. Like it's not from a traditional perspective. Like I would not know. Like, oh yeah, okay, so there's an external price feed that nobody can verify, that brings it into these other decentralized apps and that sort of stuff. It's not a thing. Like I don't know anybody from the traditional market that can understand what a smart contract or an oracle is.
Yeah, but one thing they can understand is that you can take your dollars, you can convert it into a cryptocurrency version of that dollar, and then you can receive an 8.5% potential yield on that because of some type of product. And then they're wondering, well, what is behind that product? How do you get so much yield in crypto versus, and so I think these, not necessarily the word smart contracts, but as they start to see these financial products, and hopefully, introducing more levels of sophistication around, the crazy expectations of returns that people have in the crypto market versus understanding that if you get higher returns, it's normally at a higher risk. I think it's, I think a lot of traditional finance are going to be looking for being exposed to these products without necessarily coming from there's a smart contract.
Yeah, I mean, like that's true. Like and this is one of my biggest things that I've been focused on over the last couple of months from a personal perspective. It's like DeFi, which is like the whole, you've got smart contracts and the whole thing. How does DeFi play into this? Everybody had like, last year it was like, oh, decentralized finance is the biggest thing on Ethereum and like a bunch of other chains. Got Maker. We all know what happened to Maker over the last month, almost went bust and that sort of thing. So I don't know how DeFi will progress. And I was bullish like coming into 2020. Now I'm more like bearish on that.
Well, let me ask everybody this: with the halving coming closer and closer, and I know some people in the world mistook the flash crash as the halving, but that was the wrong halving.
My portfolio already happened.
What are people's thoughts now that we've seen what's happened in the last 30 days with the market on Bitcoin? What the last halving showed us from a statistical point of view. Now that we're 60 days away from it, or close 45 days away from it, or so, what's everybody's view? Are we baked in? Are we going to see a pump? Are we going to see nothing?
I thought we were already baked in. People would say we were already baked in at 10K to go into the halving. Like they were saying, oh, we already baked in like 3 months ago at 10K to go into halving. I'd say probably, but I'd probably say after halving we'll go to 20K. But I know Tone has more bearish, not as bullish views, sort of thing. Also, he is eating his food with a fruit knife, with a knife. Can we like just say he's like sitting there with a knife eating his food?
He's in lockdown. He's in a cave somewhere.
He's like little like, you know.
No, I started drinking really early today, so this is not going to end well.
Can't wait to see those afternoon trades.
No, I'm just like watching Tesla. It's like really, I have to have a tough decision to make in about an hour. Oh, sorry, go on, Dinesh.
No, I'm just saying, like I was just saying, like I would say the 10K was probably priced in, but I think, you know, post having, as Alex's question is like, I think we go back up to 10 and then 20 in 6 months after.
Yeah, I think the halving is priced into people that know what Bitcoin is and understand how it works, and everyone was leading up to the halving. If they've experienced, so you know, you've got people that experienced the last halvings, or people that are new to crypto, and then they've looked at the halving, and that was kind of factored into the price. What I don't think is factored into the price yet is the interesting conversations that arise due to the complete unique circumstances where we have, you know, the massive amounts of attention and conversation after this health crisis. Obviously, most people are focused on survival, family, preparing, and you know, and trauma and
also confidence. Yeah, right. So the low confidence is going to definitely subdue any demand for entrance into the market.
Well, but the conversation that comes after this, if you know, let's say that we enter a continuous state of lockdown, the statistics start to become less depressing. And all countries are planning their exit strategy of how to let people out of their homes. Then at that point, I think we get the exposure to the financial crisis, and everyone's attention starts to focus on some of the things we're discussing on this show. You know, most people are not discussing these things. They're in just too much craziness to even think about finance beyond how do I buy my groceries and hoard right now. You know, but eventually that conversation changes to, well, how did the government afford all this stuff? What are the implications of this stuff? And really it becomes so much easier to explain Bitcoin to people in this environment. And therefore, I think that's going to introduce a lot more people to the concept of halving, just due to the fact that people will be discussing things that under normal circumstances, no one's talking about government printing money and things like that outside of the financial space. But I think these conversations are going to be brought to the front of mind, and more people are going to contrast that. And so I think the halving conversation, while not going to be debated around the world by everybody, is certainly going to be brought to the attention of a lot more people that were unaware of this concept of a halving. And I think that's not factored into the price yet.
Again, if I may comment on your what you said about most of the people not aware of or not going to really pay much attention. But if you think about it, if the wealthiest part of the humanity, they may actually jump into these things, and they actually, from their perspective, cryptocurrencies could be something that they would want to experiment with, at least, or get their knowledge base up to a certain level where they would understand what halving is. They would understand what's the difference between Bitcoin and Ethereum. And I think for these kind of family offices, high net worth individuals, could be the right time, and this is where we could see some of the entrance to the market.
I agree with that, and this comes full circle to the ETF conversation because the ETF doesn't exist, they have to buy Bitcoin, and they have to figure out those things. So to me, like, I think it's fortunate timing that the ETF doesn't exist in this time when all of those family offices and all those institutions are really going to research into this. In a normal circumstance, they would never have even looked into it.
All right. Hey, Simon, I got a question for you that has absolutely nothing to do with anything we've talked about so far. And this could be like given the shortest answer possible. Because I also want to know the answer to this question. As an investor in blockchain, formerly blockchain.info, now blockchain.com, are they ever going to adopt SegWit?
It's pretty crazy that they haven't. I don't actually know the answer to that. I was before all this crisis, I was in their London office with Nick. And I should have asked him that question, but yeah, I'm pretty ashamed of the company for not having done that. It just seems ludicrous.
Well, I honestly, I think what makes it really, really bad is the fact that one more Peter, the CEO, tweeted in January 2017 that they were ready. I think that's what makes it really bad.
Yeah, it's strange. Like big blocks. I always call them blockchain.info. I can't get that out of my head.
Oh, I do too.
But you know, they were really the first place that any of us went to try and download a wallet.
Oh, that's true. It was the first wallet I used until about mid-2014.
You started using a Bitcoin.com wallet after that?
Hey, I got a question to Simon. You know, you guys have a lot of positions in esoteric investments from what, you know, Bank to the Future does in their participation in the startup function. With that being said, how are you, what's your feedback from whether it's your investors or you guys principally on the esoteric side of the market, and what that outlook, that resolve is going to be? Do you guys have any like picture painted on what that looks like in the end?
In terms of the crypto, like the companies?
Yeah, for your portfolio.
Yeah, so I do a weekly show called Bank to the Future Live. So and I went live just before this. Right before this, I was going through all the different industries in the crypto area and how I think this affects them, and some of the portfolio companies more specifically. Then I was on Kaiser Report, and then I jumped over to here. But so I think the big winners out of this. So we were looking at 7 different industries. Firstly, you know, Bitcoin, I think, is going to be get an incredible amount of interest as a result of this. I think we're going to see crypto exchanges. They thrive on volatility. So the highest performing companies on Bank to the Future have been crypto exchanges. The investors that invested in the Kraken Series A to the Kraken Series B got a 200x return. Those that invested into Bitfinex got a 16x plus another 10x in dividends as they redistributed all of their profits. And other exchanges have been the highest performing out of this. So whenever markets are going up or down and volatile, then the crypto exchanges do well. Crypto mining is an interesting part. We have a current deal in the crypto mining sector right now. Interesting timing, because they secured investment from Peter Thiel and Winklevoss Capital to bring more mining, vertically integrated chip manufacturing, ASIC manufacturing, and they've created these cooling units that they were putting in Texas, which they said is one of the best electricity sources. So it's interesting to see that they were trying to geographically relocate some of the mining over to America, and then obviously like the situation and the politics between China and America as a result of this coronavirus is just interesting during these times that we were working on that deal.
Well, that's got to be affecting the mining industry on that side. So as far as isolation, bifurcation of exports.
Yes, certainly, and you know the supply chain breaking down, and you know these are certainly affected. The fact that many.
But it's almost over now. I mean, I've chatted to a number of mining groups, and again, as China sort of went out of the lockdown, things have started to happening. The deliveries started to happen, so things are getting very normalized, not just within China, but it's also outside of China in terms of shipping goods from there. So I think we're back to normal as far as that concerned.
Yeah. Hopefully we don't get second wave, but there's no way that we can trust some of the statistics that are coming out of China right now. It's just not possible to rely upon those in terms of, but yeah, in terms of the supply chain, that certainly seems to be coming on. And we saw it where the blocks went from 10 minutes to 13 minutes, and a 16% difficulty adjustment is again, it's starting to show the efficiency of how the system was created to adjust to this. Me personally, in my time, I've seen shocks like this, not quite like this one in terms of reasons, but in my crypto lifetime, I've seen my $30 Bitcoin crash to $3 in a very short period of time. I've seen my $1,250 Bitcoin crash to $250. More recently, I saw my $20,000 Bitcoin crash to $3,000, and people start to experience that. And we've seen these shocks, and the mining industry is resilient. It always bounces back, it always adjusts, and it's built into the algorithm. I think we're seeing a real increase in terms of wallet downloads at the moment. So we're shareholders in Exodus, for example, and Airbits. I think in terms of DeFi and lending services, I think we're going to really start to see what's under the hood, but behind those large returns that can be achieved in the lending services. Obviously, they got a real test in terms of the massive margin calls that they needed to do as a result of the price increasing and people having to have some of that collateral liquidated. So I think we're going to see some interesting on the peer-to-peer lending side that come as a result of this. But that's a bit of the DeFi side is a bit of a black box. I think we're going to learn more, and we're starting to experience more. Things like we were invested in the security token industry, companies like Securitize. I think we're going to see a delay in the adoption of more exotic products through security tokens. I think they're going to use this time, if they're well-capitalized companies, then they'll use this time to build a lot of infrastructure. But, so in terms of equity, we're expecting some of the companies to go bust, and we're expecting other companies to come out of this really, really strong.
I mean, one you pointed out, Securitize, I think what Carlos and the team down there has done has been fantastic. I think to your point, it's about adoption, but I think that the pool of liquidity and trading will come, and that will become a core base of asset trading is asset-backed tokens, and Securitize is so damn well positioned, man. What a great company.
Yeah, Securitize are probably one of the strongest teams that we've ever invested in terms of releasing products and just delivering upon their promises. And yeah, they're in a very strong position, definitely. But security tokens is going to definitely take some time. At Bank to the Future, we were going to be releasing a security token exchange. We've shelved that product for now because we're seeing so much demand from new high net worth investors that want to just simply get into Bitcoin. And we're helping them, with that process through some of our partner companies. And also then I think that they're going to, we're seeing liquidity down in terms of investing in private equity. Some of our companies, like more established companies like Bitfinex and Kraken that have secondary markets through Bank to the Future, people are able to get severe discounted valuations relative to how well the companies are performing in these markets. And that's just a function of equity markets and people's desire for liquidity. So it's producing some really interesting opportunities for the longer term, high risk, high return investor that wants longer term exposure to the fact that we believe that every single financial product is going to be reinvented by this industry at some stage. But it's going to take a longer time to get through this. Initially, it's back to basics. People want Bitcoin, and then they're going to want to diversify into equity in the industry, and then they're going to start looking at more exotic products like security tokens. But those are really correlated to what happens in the traditional markets, definitely.
Yeah, I was just gonna on your comment about supply chain and that sort of thing. I was just talking to George last week, and everybody else, like, you know, this supply chain has been disrupted. We shouldn't realize it. And like, I was gonna get the AirPods that George is wearing right now, which are like the little, like, fancier ones. And I was like, oh yeah, I'll get them at regular price. In about 6 months to a year, they're going to be like $5,000, and a new iPhone is going to be like $20,000 because supply chain.
Why? Whoa, why do you think that? I completely disagree with that, but I do want to, you know,
I think it's the production backlog that's not really going to fill that.
Well, I want to get Benjamin in here, but why do you think we're not going to have inflation like that? I think those AirPods are going to be even cheaper, because like no one is buying shit right now. No one is delivering. Stockpile.
It's less of inflation.
Oh, demand is still there. Yeah.
I don't think
it's all coming from China.
Yeah, I don't think the production may or may not might happen. Like, it's not. Who knows? And those Alex already has. But if the production supply chain has been disrupted for whatever reason, then people will pay up more for it.
Well, I take the other side of that. The supply chain has been disrupted, and a lot of this inventory is piling up in places, and they can't move it. And eventually, technology advances so quickly that there'll be new pods within a matter of 6 months, and the stockpile of the ones that you want are going to be sold at a discount come Black Friday in November.
Yeah, but they may not be. The difference is that they may not be made in China at this stage. So if we're going to get, as a reaction to this, a deglobalization, then everyone's going to be looking at how they can make things more locally, which is inevitably going to be more expensive than
but higher quality. Bro, like I'm learning my lessons every time I buy something. Like at this point in my life, I'm paying for better quality at this point, and I think people are starting to realize that.
What's your? Sorry, go ahead, Simon.
Yeah, no, Cairo.
No, I was on the side note, I was gonna introduce Ben, who just joined. Ben, hey Ben. Cheers. Ben's like a writer for Decrypt. He's been on Bloomberg. He's been on Yahoo Finance. He's like a guy I speak to like on a regular basis. So I thought it'd be more apt for.
What's up, fellas? Thanks for having me.
Hey Ben, go ahead. Do a quick intro. You guys share a similar beard, by the way.
Yeah, we're beard bros.
I shaved mine. I'm in quarantine. I'm like, you know what? I want to be clean shaven for a little while.
Quarantine is the time to grow it out.
By the way, guys, it's 8 p.m. in London, and everybody's out there clapping for the NHS workers. It's really hard to hear anything out there.
I can try and show you to see if we can see anything in the Isle of Man.
Oh, you can hear it here. It's like a.
Here's everyone in the Isle of Man.
Cheering for the NHS. Yeah, I don't know if you can hear it here. At 8 p.m. every day, everybody goes out to their balconies and cheers.
Really?
For the NHS, yeah.
Everyone claps. Closer.
That's classic, Dinesh. Classic.
George, there's Howard London in the background. Beautiful.
So that's
George lives in like a really nice apartment that
overlooks
the rest of London.
Okay.
Hey Ben, you got a really big clap from the whole of.
Oh yeah. Oh, one last thing on the beer.
Great entry, Ben. Like, this is great.
It always happens.
Yeah,
I'm always the contrarian. That's why I've been shaving while in quarantine. All right, Ben, go ahead, do an intro, talk about yourself for a minute, and we'll talk some crypto and traditional markets.
So Dinesh pretty much summed it up. I'm a freelance writer, analyst. I've read some stuff for Decrypt. I'm working for BitPay right now. just sort of try to do as much as I can within the crypto space.
All right, how long have you been in the space?
2017, I guess. Some like a couple months before the Bcash fork.
Yeah, you know, it's amazing.
Bitcoin
Like,
Cash.
there's
You're familiar with Bitcoin Cash?
in my experience, there's been 3 waves of entries into crypto. One was Simon was part of that wave. That was like the 2011 guys, you know, Max Kaiser, you, Simon, Roger, you know, the Trace Mayer, like all of the ones that are probably still considered OGs. I'm not sure what your definition of an OG is, Simon. I think I'm getting to be on the border. I think I have a definition for what is a Bitcoin OG. If you've been in Bitcoin longer than half of its lifetime, you're a Bitcoin OG, because then it kind of expands, right? So when Bitcoin is 20 years old, if you've been in it for 10 years, you should probably be considered an OG. So that's
I think Tone has traded Bitcoin since 2004. Not sure, but I think so.
So, I mean, there was that wave of like the 2011 guys going into that $30 bubble. And then there was the wave that got me in. It started with the Cyprus bubble, and that wave went into the 2013 market bubble. So that was wave number 2 of people, and so many people got in that 2013 zone. And then the third wave of entry. What's up?
What about the Silk Road closure? Would you call that the same time?
You know, the Silk Road closure, that's an interesting one. See, I remember that day so well. I don't think the Silk Road closure got Bitcoin in. I think it's what happened the following week. Everyone remembers the Silk Road closure, which happened October 1st. I remember that day. The price of Bitcoin fell from about 120 down to 80 bucks. Within 3 days, it was back to 120. But it was something that happened about a month later. And that was the very first Senate hearings in the US about Bitcoin. And those Senate hearings literally drove the price from about $300 to $800. I think those Senate hearings that happened just a month after the Silk Road closure did a lot more to put Bitcoin on the radar than the Silk Road closure itself. Because contrary to popular belief, not everyone needs the substances that Silk Road was selling. Like, for example, in my case, the Silk Road was never, I don't know no one believes it, but Silk Road and that use case for Bitcoin was never like on my radar. Like, I've never done any substances. Like, that was never a use case for me, and it isn't for a lot of people. And I was working on Wall Street, contrary, and so was Dinesh. And contrary to popular belief, not everyone on Wall Street is like Jordan Belfort, right? Like, that's not what actually goes on there.
It is not a thing. Like, it's not Jordan Belfort's situation was like in the early 80s. Like, it's not like nobody like rolls into like fucking the street.
Right. Well, like I've never seen anyone do cocaine in front of me in the 10 years I worked on Wall Street. It only took me about, I don't know, a month in the Bitcoin space. So let's.
What was the third wave? You did the first 2.
What's up?
The third wave of adoption, you did the first 2.
And the third wave of adoption was the 2017. And it's amazing how many people got in 2017. And each wave of adoption is about 4x the amount of people that show up than the prior one. And that second, I don't know what caused the first wave of adoption to, eventually bottomed out. It might have been the halving event, because there wasn't too much happening in 2012. But I remember in 2014, the final major event that kind of gave life to those that sat through a year and a half bear market was the Greek banking shutdown. And I think what is happening right now is that equivalent to those that got into the 2017 bubble and perhaps still sitting on a losing Bitcoin investment. They are watching the current, money printing scenario, the current economic implosion. Like I was watching the Greek banking shutdown in 2015. And I think this is the end. And, the final, I guess, like sigh of relief for those that got in the 2017 bubble as to why they're in this space to begin with. And I think towards the second half of 2020, we're going to start to get that fourth wave of adoption.
Yes, I'd say that the class of 2017 in crypto was young people that were never going to be able to buy stocks, bonds, get a mortgage, didn't save for a deposit. Maybe they were about to go to college. They were in debt. And for the first time, they found a financial product that interested them. And they started speculating on ICOs and crypto and all that stuff. So I'd add one in between, actually. The 2016 was when Blythe Masters went around every single fund manager in the world and told them that it's blockchain, not Bitcoin. And there was an interesting story behind that one, because it was really fortunate timing. Blythe Masters was telling everyone that the creator of the credit default swap, she was telling everyone that Bitcoin shit, blockchain's good. And
you and I are still here, and she's gone.
Yeah, exactly. Yeah. But the Jeffrey,
like, what happened to Blythe Masters? She was like the biggest
Mythbusters. I think she did an exit.
Gone.
They sold Hyperledger, and that's it.
Yes, but it was really strange timing, but Jeffrey's investment bank was doing like an educational series, and for some reason my name came up on the radar, and they sent me to every single buy-side fund manager that you can imagine, probably controlling 80% of the world's wealth in terms of assets under management. And they asked me to sit down and do a one-to-one with them on Bitcoin. And they were all coming from the Blythe Masters meeting. And essentially she did the indoctrination of blockchain, not Bitcoin. And I was there to do the opposite of Bitcoin, not blockchain. And so many of them, they didn't invest in their funds, but so many of them in their personal money invested in Bitcoin, because it was really the only blockchain that they could actually acquire the asset for, because everything else was theoretical. So I think that whole, the banks trying to take over the word Bitcoin and call it blockchain was a massive wave of adoption that really went the opposite direction than they wanted it to go.
John, sorry, Benjamin, how are you? I thought you would have had a little bit more of a intriguing question to ask, given that you were at Decrypt and at Bloomberg, and you're at like Yahoo Finance sort of thing. So
I'm just kind of catching up. I'm sorry. And I've got a 5-year-old whose birthday it is right here.
Oh, okay. Well, happy birthday to your 5.
What's up?
Happy birthday to your 5-year-old.
Happy birthday, Ellie.
Yeah.
Cool. So I think I'm gonna call it an evening now and try and get some dinner. I'm pretty hungry.
All right. Hey, gonna let you go.
Like a liquid dinner. Like, what are we like? What's the solid dinner? That like, you know.
I know. Yeah. So no, that was my dinner right here. So I ate an entire This is what people are like. Tone, are you eating with a knife? Yes. So I literally ate like an entire thing of cheese. That's what I was doing with the knife.
You got a lot of steak back there in the freezer, though. I see.
Oh yeah. I was actually those that follow me on Instagram, I've been like Instagramming my cooking. So those that are interested in the Tone Vays cooking channel.
Have you? Is it Tone Vays Instagram that does the cooking?
Yeah.
I saw the fish entree the other night.
Yeah, the Tone Vays cooking channel is currently taking place on Instagram stories.
Are you still doing the carnivore thing? Like, how does that work in a lockdown?
I am. I'm doing carnivore plus avocados plus some nuts. That's pretty much my diet. It works well. I stacked up on liver, man. Like half my freezer is full of liver because you can eat like 200 grams of liver a day, or like 100 to 200 grams of liver a day, and that's like.
Look at Denish's face.
It just sounds like a little like Hannibal Lecter conversation. I love liver. Right?
Let me ask everyone. Let me ask everyone a question. At what stage? I think everyone in this situation went through different levels of consciousness in terms of what this means. Like, at what stage did each person decide, okay, this is pretty serious. I need to stop traveling. I need to actually, protect myself and take this seriously. Or maybe some of you are not there. Like, what was the trigger for you deciding that this is something a bit more serious?
The trigger for me was when I caught it.
When I saw the frozen White Castle burgers starting to be depleted at the grocery store, I knew there was something happening.
I'll answer last. Go ahead. I'll let.
It hasn't happened to me. I think I don't have it.
I'll tell you when I should have taken it more seriously. When I watched the little video, like I get a lot of like conspiracy stuff, and you scroll through Twitter, and I watched the video, and this would have been probably probably late February, very early March. And like the Chinese like authorities are literally like putting nails and like locking people up in their buildings and like dragging people as they're screaming into buildings and like locking them up. That's when I should have taken it more seriously. But I started taking it seriously. I was still in South Africa, and I knew that the US is about to, because of the US libertarian views, the US was gonna be kind of loose on it, and I was watching what's going on in Italy, and I'm like, well, it's gonna be disaster in the US, especially LA, New York, and I'm like, hey, maybe I'm safe here in South Africa. And then I watched for 3 days in a row as the number of cases in South Africa just doubled. It went from like 4 to 8 to 16 to 32 and to 64, and I'm like, shit, I better get on the next flight out of South Africa. As nice as it is here during the summer, I don't want to get stuck here for 6 months. I'd rather, be in the US and locked down.
I didn't think you were going to make it back from South Africa, honestly. I mean, I saw I'd flown in from London on the Saturday, the 12th or something like that. And I saw you still tweeting from South Africa. I was like, wow, he's getting stuck.
And I was a little worried because that flight from South Africa, so I had to go I was in Pretoria, South Africa at the time, which is their capital. It's their third biggest city, I think. And I had to go from there to Cape Town and then spend all day at the airport, and then a 16-hour flight from Cape Town to the US. And that flight was full. There was a wait list.
Were you in the middle seat? Were you in the middle seat?
No, I paid for it. I ended up like last minute. Well, I was like checking the app, and last minute, like a business, like an economy, not a business class, but an economy, like a premium economy for like $200. Window opened up, and I'm like buying it. So window premium economy, but it was still kind of scary, man. I mean, like you're packed on this plane, and I'm like, the flight attendants, are, I mean, they're kind of using gloves, but there was one incident where I don't eat on airplanes, but it's a 16-hour flight. Like, can I really go without water on that 16-hour flight? And I'm like, and the flight attendants are walking by, and on those long flights, by the way, like all the flight attendants are like 50 plus, because they all want these 16-hour flights because they're like supposed to be like the best like money kind of flights. And this flight attendant, he's wearing gloves, and I asked him for a water, and literally he grabs the water bottle. It's like a big water bottle like this. He grabs it with his hand, the tip of the bottle, to pick it up, and pours it into my cup. And I'm like, I'm not drinking this.
Well, that's also the same here. They have like social distancing outside of grocery stores. So you have like a stand out like a meter apart, but it's usually in the store. Everybody's standing right next to you. Nobody's wearing gloves. It was like handling your food, like whatever sort of thing. It's only on the outside. They're like, oh yeah, meter apart, social distancing. Like
yeah, like I go to my farmer's market and they're like, you're supposed to stand like 6 feet away from a person. Like, we're outdoors. Like I
Well, don't go to a U.S. post office. They'll shut you down over there.
It's
I couldn't believe it. Well, like
My daughter and I went to one yesterday, and it was like it looked like there was one person in there. It was the woman at the desk. I opened the door and she starts screaming at me, 2 people at a time, 2 people at a time. So me and my kid walk outside. There's like 60 feet between the door and the cashier. Waited until the person walked right by us. That was in line, and then we went in. They're pretty anal about it there.
Well, it's for good reason. I think Dinesh caught it after he touched an avocado in aisle 8.
It was literally like as soon as I realized that nobody in the grocery store is wearing gloves and they can pick shit up, put it back, cough all over it. Nobody is noticing anything. And now I'm sitting here like just drinking whiskey without like any taste whatsoever. So
But the other thing I was gonna say was, look, there's just these two extremes. There was like, hey, we need to shut down everything. We need to shut down the economy, and this whole thing with the masks. Why can't there be somewhere in the middle? Hey guys, you can keep your businesses open, but please make sure all your employees are wearing masks. Make sure you don't have too many people crowding in your business. Like, there is a happy medium here to both stay safe and still keep the economy functioning.
But not when they're trying to send out helicopter money to everybody and get a
oh yeah, shit. Have we
bailout bill?
$1,200 helicopter money that people are gonna get? Ben and Joan at all?
What's that?
The $1,200 or like any of the helicopter money they're gonna send through.
I think I'm gonna get the 12, but I don't think I'm gonna file for unemployment. I am a 50% owner of a physical business that hasn't been doing too well over the last 4 years. So this could be a potential exit strategy for me. I gotta read the paperwork.
Do it, yeah.
Might not know what the $1,200 thing is on the cast. So Ben or Toad, do you want to recap like what the $1,200 thing is, so to let people know?
Hey Ben, just before you go through that, I'm gonna have to call it a night. I've really enjoyed meeting everybody. And
Awesome, Simon. Great chatting with you, man.
All right,
Guys, I gotta jump off too. Thank you very much.
Hey, thanks,
Bye,
George.
George.
Thank you guys.
Good having you guys.
Thank you, guys.
I had one question, John. You remember March 18th is infamous day on CNBC, and that was the day that a gentleman by the name of Bill Ackman came on and pretty much publicly cried for about 2 hours.
It was half an hour. Come on.
Now, his rationale was shut the whole world down for 30 days, nothing, because, and I understood, at first I thought he was crazy, then I understood it, right? So as we go through an issue that we're going through now, it's a roll down, right? So you have companies that are slowly just wilting and dying. If you shut it down, his thought process was they save face, 30 days later they reopen, the world goes on, less cases, blah, blah, blah. What's your thought on that?
Well, they've taken so many of the intermediaries out of the market, Alex, and by that I mean, of course, any of us can buy on dips or sell on rallies. But for the most part, the intermediaries who were there for the real short-term stuff are gone. And they've been replaced by algorithms. It just is a fact. It's not saying algorithms are evil. We all know they work the same way to the upside as they do to the downside. But when you are seeing a melt up and people are getting hurt that are short, and we're talking listed markets now, of course, they get hurt in decentralized markets as well when they're short and the market goes up. But in the listed markets, you're not bankrupting companies and you're not forcing companies towards bankruptcy. When you have some of these stocks open right now that have absolutely no revenue, that are just hemorrhaging money. And, I'm not the champion going out and saying that these guys should all survive in any case. I'm saying that clearly stocks, Alex, like cruise lines, we all know that they're flagged under other countries' flags for a good reason. Most of that is so that they can get around either tax laws or so because the insurance is much cheaper, and almost all of their workers are foreign workers. Not a slam against.
So do you blame a governor like Governor of Florida when they turn ships away and say, hey, go to Bahamas where you decide to register?
Right, where you flagged. I agree. And obviously pretty extraordinary times. I hate to see stuff like that. But as I say, if you, and by the way, I'll throw it out there to you guys and to the viewers, I think that at least one or more of those cruise lines is going to get bought by private equity. I think they're going to get so cheap that just for, 10 cents on the dollar or whatever it ends up happening, the longer you keep something open like this that is just bleeding money, the greater the chance that one of those just basically is pushed into the hands of the stronger hands, which, last I checked, Ben, you'd probably know about this, Benjamin Miller, somebody like Blackstone or BlackRock that has $1 trillion in cash. I mean, it's an unbelievable. I mean, I guess BlackRock has, or Blackstone rather, has $1 trillion out of the 7 trillion they've got. $1 trillion of it is in cash, and it was as much as $1.7 trillion when they did the last filing. I don't know what it is right now.
Just to let you know, NCL, which is Norwegian, today alone down 14 change percent, down 86 for the year. Now, some are saying, hey, we may be off 84, 85%, but our fair value is about $40, not the $8.25 it is. I mean, is the recovery going to be really slow for these guys, Ben or John?
Go ahead, Ben. I'll go follow you.
Yeah, I mean, I think so. I think it's going to be slow.
Yep, I would say so too.
I'm with you, John.
What's that, Patone?
I'm with you, John. I'm actually buying up like a bunch of cheap calls on stocks that have gone very cheap, like GoPro, for example, going down to $2. They have to have some good intellectual property. I haven't looked into what kind of IP they have, but like someone is going to buy out GoPro the way someone bought out Fitbit. There's intellectual property there that they started a whole movement with those cameras. Someone is going to buy them out.
Right. Well, and when you look at things, Tone, like, replacement value, I would be buying, even though I think some of these may go to, to bankruptcy filing, reorganization, not liquidation. But again, they're not U.S. companies. But in that cruise line space, let's just stay on that one for a sec, Alex. When you're looking at a boat when it comes online being somewhere between 300 million and $600 million, and the value of NCLH is, you said Norwegian, didn't you? Norwegian Cruise Line. NCLH is trading at a valuation today of $1.4 billion. Come on. I mean, with the fleet you've got, you're talking pennies on the dollar here, guys. So what I would say to anybody, who might say, oh, wow, that kind of makes sense. Maybe I should be buying one of these. Know that this is money you might just tear up. But if you wanted to, you could play it one of two ways, the way I look at it. Well, three ways. One, you could buy the equity, you could buy the stock. Two, you could buy a longer dated option, buy an option that's out there in the future because of what Ben said, that I think is correct. that they don't just make a V-shaped bottom. They have to get, they have to work through it, and they have to bring people back onto these ships. And, you know, there's still, Branson has a $700 million ship that was
Brand new.
coming up, that Virgin, his ship. And they have a partnership with a whole bunch of really smart people. But that was before Corona and everything else took us to here. NCLH. There you go.
NCLH. Now, if you're going for the people that are going long on it, are you buying it for its intrinsic value because it's just fallen so sharply that in the case of a liquidation, it's still going to be worth more?
That's what I think, Alex. I think that in the case of a liquidate, if these guys had to get liquidated, that would be, of course, a different bankruptcy filing. There's Chapter 11 and Chapter 7, at least in the U.S. code. And if these guys had to sell off some of their assets, or if they get bought by a private equity like I have suggested that might happen, I think that you know, you're getting an awful lot of value at this crazy 1.4 billion valuation right now. But I'd buy it 6 months out into the future. I'd look at those calls.
Sure.
Those are two ways: one, buy the stock; two, buy those longer dated calls, which is less risky. And the third is you buy their debt, because you're going to be in line then ahead of everybody else when in some sort of a liquidation.
You saw NCLH this morning, right? They went out this morning or yesterday with $3 billion.
That was Carnival, I think.
Oh, was that so? Carnival, and they got $6 billion in interest.
Yep. Yep, and it came down from, I think they were initially having to pay 16%, came down to 13.5%, and I think eventually that coupon was right around 12, but I didn't follow it that closely today. I can try to pull it up.
It was 12. It was 12.
It was 12. Thank you. But again, those are risky plays. But I remember buying American Airlines, Alex. One of the best things is if one of these companies goes into bankruptcy protection, and that equity, I think American was trading for like 24 to 40 cents a share.
Are you saying after 9/11, that was a risky play? That's a whole different story versus this time around, it's a riskier play. Any of these travel things, it's not just terrorist act. It's kind of like this might shape everything else.
No, I don't know, Dinesh. It's a risky play this week. I don't know if it's a risky play a month from now. I'm looking at these stocks right now as a technical analyst. I would not buy today. I would probably not buy tomorrow, but I would consider buying in about a week or two. Just the technical analysis on this is telling me it's going lower, but there's only so much lower it can go. And I personally like going on cruises. I will go on cruises again. And I would love to pick these things up early. Now, if technical analysis can get you in a lot of trouble, like what happened with me in oil, I was going to buy oil tomorrow or Monday or Tuesday, and it looks like I missed it.
Well, let me ask you this, Tone and John. Let's switch it around to airline.
Just on the cruise thing, the outlier here is actually cruises get banned. Cruises get banned completely because shit happens.
No way.
Whatever happens, it's done. Right?
No way.
As I said, that's an outlier.
No way. No. Absolutely not. The tourism industry will be the only industry that exists in 50 years besides a computer programmer. Everything else is going away. There will only be two industries. Computer programming, there will only be two jobs. Computer programming.
You got to pick one.
Service sector.
That's it. 50 years from now, if you're saying people are still hopping planes to go somewhere, like that's like a
unless you have an insight on someone building a teleporter, that's exactly what I'm saying.
No. So that's like saying like nobody will have VR, no AR, no nothing. People are going to actually hop on a supersonic jet to go somewhere.
Absolutely. Look, VR is all fun, but people will realize real quick that, like, you know, Tinder inside a bar is better than Tinder on their phone.
I get Tinder on a phone. Like actual fractional, like fine, but like if I'm hopping on a Tinder across the Pacific, that's a whole different story.
Cruises, though, of all the everything in the travel sector, cruises, I think, have got to be hurt the hardest, right? I mean, the things are
they're not included in the bailout.
What's that?
Yeah, they're not included in the bailout. I mean, nobody. Yeah, I mean, guys, this is my last question on this, which is UAL, DAL, and AA, and the rest. Now, they're all part of this package plan that Mnuchin has put together with the government and helping get through these times. Now, I like the airlines because they're pretty cheap right now, just like the cruise ships. But there's two. I want to know if two are favored over the rest, and that would be UAL, and I believe the second is DAL, which are both backed by Warren Buffett. I believe he owns just shy of maybe 5% of each of those airlines. Now, my thought process is that if I'm taking a long-term approach to this, where I want to double this money in, let's call it 8 to 10 months, that these two airlines are the ones that will not go bankrupt, that he will have a bathtub moment in the time of crisis, and UAL and Delta would be the ones that survive because of his backing. Thoughts?
I have calls on UAL out till June. Not doing too well right now, but I'm with you on UAL, United Airlines, for those that don't know what UAL is.
By the way, guys, just a quick one. I looked it up. So Oasis of the Seas, which is Carnival's, that was one of their biggest deliveries. That ship was $1.4 billion. That ship alone was what NCLH is trading for right now.
You're kidding me.
No. Oh, wow.
Yeah. So it doesn't mean that they don't go bankrupt and go liquidation and all the rest. But I think at some point, if you want a 10x trade out there, to throw something on in an $8 stock like NCLH, or we could look at the other ones, CCL and the rest, but to throw something on in there 6 months out, even if Dinesh is right, and I'm not saying you're wrong, Dinesh, I'm not saying that. I'm just saying I'm a little more optimistic, but you might be right. That's why I don't want to put my whole nest egg in that thing, but to put on, you know, whatever's an appropriate number, 6 months or further into the future, I think you could potentially have a 10x trade there.
I'd love to know their debt load, their market cap.
I'm sure it's massive.
1.4 billion, and they bought a ship at 1.4 billion. I'd love to see that.
Well, I mean, like, I was way higher than.
Yeah, and I was doing. All I did was look up delivered ships, and the first one that came up, Alex, was Carnival Cruise Lines. I think they called it Oasis of the Sea, and that one was 1.4 billion. But that's a Carnival.
I can swear Oasis of the Seas was a Norwegian ship, but I could be wrong there. But this becomes the Bear Stearns situation, right? Like, I was at Bear Stearns during that collapse, and when Bear Stearns stock dropped to $2, their building in the middle of Manhattan was worth more than the market cap of the company. And Jamie Dimon is like, I'll move into that top floor.
Well, I mean, like, you can't, I mean, none of it is like an immediate reaction, really. You can't, it's not, and that, I guess, separates crypto from traditional markets. Like, oh, if your shitcoin is going to zero, then you are going to zero. Versus in traditional markets, there's different aspects of like, oh, hey, is your stock, is Deutsche going to like $5, $2, or whatever sort of thing? Versus the rest of the business still is churning out something sort of thing. So it's a little bit of a different situation in that sense.
Well, it's also because if you look directly down from the sky on top of the Bear Stearns building, Jimmy Dimon noticed that it's the exact shape of the Chase symbol, which it is. Which it is.
Yeah.
Would you run this?
My memory is right, because I've been on the Oasis of the Seas. It is a Royal Caribbean ship, not a Carnival.
Is is the Royal Caribbean, I don't know the cruise business. I just don't know. I'm a huge seller of the cruise business in general because, again, as I said, you never know what's going to happen, if they're going to ban it or not. But like, is that separate? Like, how big is the other one compared to Royal Caribbean? I thought the other one was like the largest one around.
Well, again, like the Royal Caribbean, I'm not sure where their stock is. Look, it's speculators. There's a lot of people that own that stock that don't care about the valuation of the company. They just want to get out. And it's the same thing. It happens in every single market. Like it happens in Bitcoin as well. It happens everywhere, right? Like if there's enough people out there that are trading these companies that don't know anything about their fundamentals and they don't care. They just want to get out. And that's why the value of a lot of these companies will go way below their intellectual property value. And either the stock is going to rally up or someone's going to buy them.
Yeah, it's true.
Yeah. I just want to note that someone pointed out in our chat that Dinesh is going to need oxygen soon.
Yeah, he probably more whiskey soon.
Hey guys, yeah. So Tesla went under 450. It's down to 447.50.
I'm telling you, Tesla took like $1 billion round trip across, $100 billion round trip across.
Yeah.
It was a short squeeze, and that happened.
John, what are some of the things that you and your brother are watching lately? Don't give away the family secrets, but just maybe a few.
Well, we're using a lot of alternative data to see what's going on. It's such a cool space, alternative data. And so, for instance, even though it sounds like he's setting me up, guys, Alex didn't give me a text or anything to say, John, bring this up. But tomorrow we'll have an alternative data guy on.
Like cue cards, is he not holding up you guys on the side sort of thing?
We'll have an alternative data guy on at the end of the day for one of our live streams. A guy from Battle Fin, Alex.
Will you bring it on? Yeah, Mark, good. Is that during your live stream tomorrow?
Yep, that'll be on at 4 o'clock Eastern, right at the close. And he's got some really cool alternative data from this guy, from this group, actually. Let me see. I think he pinged me just a minute ago about it. Where is that? Oh, Orbital Insights.
Orbital Insights, yeah. I know those cats. They're cool.
Oh, yeah. So Orbital Insights, folks, has they basically monitor satellites. And so, for instance, they saw when the drone hits were going into the Saudi oil fields 18 months ago or whatever that was, 15 months ago. And they, one of the things they do is they can measure how fast people are doing things like filling up oil tanks, drawing them down, whatever it might be. We all know with Saudi and the Russians fighting the way they are, and more or less undeclared going after the U.S. shale producers by doing that, they are looking at, of course, storage and how much storage is left. Have we exhausted all the storage? I have some insights from Orbital that I'll share tomorrow, Alex.
Very cool.
But really cool data. And again, it's alternative data. It's not, but it will be reflected in the XLE, I guarantee, by Monday after this data gets out there.
And even the traditional guys, I know like Point72, a couple others, they're using things like what Orbital Insight has, where they're judging how many cars are in the parking lot of a Macy's so that they can rationale their CPG product, stocks and what those predictions are on sales.
Yep, very true. Very true.
Very cool.
That's awesome. No, I was saying that kind of sounds really great. Do we have any more questions from the audience? And we had like Ben here, who's from Decrypt and stuff. Like, do you have any questions, Ben, for the audience, for us still?
Yeah, Ben, are you pent up with anything to spill?
Oh, we can't hear you. You're mute.
I'm on mute. Sorry. Am I what?
Are you pent up with any knowledge that you want to pour down on us?
I don't know. I mean, nothing exciting, I don't think. Trying to check out these.
Yeah, hey guys, we can take a look at the price of Bitcoin. It actually did pull back. So I've been for the last few weeks. Sorry, okay. So here's why I'm like glued to my screen on again going back to Tesla for a second. So I am short 450 puts on Tesla, and Tesla has been flirting with 450 all day. And the big decision is, do I hold those 450 puts overnight because they expire tomorrow and they are worth a shit ton of money? So if they expire worthless, that's a nice payday. But if they don't expire worthless, that could be a very painful hit.
We have an expert. We have an expert in the cast here.
I like your odds, Tone. After the sell-off, I like your odds, and I guess it's going to depend on how we navigate tomorrow's jobs numbers. But I think today's numbers, the jobless claims, is much more important than tomorrow's numbers, because that's a month back, and the jobless claims are week to week. So I think it's far more accurate, that crazy 6.6 million folks that filed last week. And I don't want to be flippant about it. I know that's real pain for people. So I'm glad it wasn't 10 million, which was on the high end. 9 or 10 million was the high end for claims today. So I'm certainly happy it wasn't that, but I know it's painful for anybody, for all those families that were part of the 6.6 million.
Yeah, no, that makes total sense. And just a quick look at Bitcoin. Look, I know we went up really, really nicely to 7,230, but at the end of the day, if we don't hold, if we get rejected by 68.50, it's exactly what I've been saying all week long. I believe 68.50 is going to pull back the price, and I don't think we're going to break out this week. I think we're going to have to wait a little bit. So it's very interesting that we pulled back and we're back below 68.50, which I've had as critical resistance, for a little while now.
So it's a buy for you right now, or a hold, or what are you looking at?
I'm looking at a bit of a pullback here. I think we just short-term topped. So if I go to a 4-hour chart, for example, I think this is a formidable top. We may, tread water for the rest of the day, but I do think we're going to pull back to that $6,000 range and then try one more time to break out sometime in a week or so.
So this volume coming from?
Sorry, I don't know how I get that. And this is good. You've got the Elliott wave 1, 2, 3, 4, 5 coming out. But you don't think we're gonna go past 10K based just on this? Like we just dropped from 10 to 3 in a day, which isn't an Elliott wave, which isn't any TA that predicted it at all.
Mm-hmm.
We think that's what's going to happen, and we're going to have like a slow climb back.
I think, well, again, it goes back to everything we've been talking about for the last 3 hours. Everyone here is expecting a shit ton of pain. Well, I mean, like, you guys are more pessimistic on the economy, thinking that it's 1929 all over again, going into a depression. And if you think we're going into a depression and everyone is homeless and unemployed, who's going to be buying Bitcoin? Like.
That's a good point. I'm also going to be the guy who butts in with random things I notice in our crowd. And one is, and this is for Benjamin. Benjamin Miller looks like the type that would knock out a bear.
I've knocked out one bear.
Was it Peter Schiff?
Yeah, it was
Earlier,
It was indeed.
Earlier in the cast, I saw some swooning on John, and there was a couple of people a little excited to see him on board. So too bad I didn't record those. I would have brought those out now.
No problem. Thank you.
So where's all the Bitcoin volume coming from? Binance has done over $1 billion, and Bitcoin Tether pair, like most of the days in the last 30 days. Where do you think all the volume's coming from, Tom?
I'm sorry, say that again. You kind of broke up a little bit there.
All the volume, all the Bitcoin volume. Where's it coming from? Like on Binance?
Well, you see, you got to break down Bitcoin volume, right? Is it Bitcoin volume as in people are buying Bitcoin for storing, or is it Bitcoin volume on exchanges? The more volatility there is, the more volume there'll be. I mean, people are just going in and out. People are getting liquidated. So I don't really pay much attention. Like, it's like a penny stock, right? Like, how many penny stocks trade, 20 million shares a day? Like, who cares?
Yeah.
It's really about volume that matters. And I still, like, if you go to Google Trends and you do a Google Trends on buy Bitcoin, it is literally nothing compared to what it was in 2017 when you got in. So I just don't see this big wave coming yet. It will, maybe later in the year, but not yet.
There was an article on Decrypt the other day about a couple days ago about the amount of Bitcoin on exchanges. It's apparently less than it's been in a long time. Let me see if I can find it. There's a lot of Bitcoin leaving exchanges, which is
it's like most of volume of like Bitcoin or Bitcoin Cash or whatever is leaving exchange. People put in fiat or whatever, buy it.
That's what it seems like.
Yeah.
Well, Novogratz just got off CNBC, bullish on BTC. I don't know.
I hate to be in line with Novogratz. Basically, that song kind of said it all. I don't know if you guys watched that Bitcoin Go to Moon song. But John, hey John.
Yo.
Remember that bathhouse, the Russian sauna you and I were hanging out in?
John's like, no, I don't remember that.
I don't remember that at all.
I mean, I almost want to know the story about that, but for the audience who don't know, a Russian bathhouse is mostly just naked bathhouse.
Not in the U.S. In the U.S., you're wearing bathing suits.
Really?
Yeah.
You and I gotta go there and chill with Novogratz. We gotta take Novogratz there.
We do have to take him there. And Dinesh, next time you come to the States, we'll take you. I tell you what, it looks just like that cave that Tone's in.
They call it the banya in Russia, where it's kind of like, you're kind of al fresco doing whatever, and everything is like free floating. So
Dinesh, it looked just like that cave that Tone's in. It's down under the subway in New York, right, Tone?
Yeah, it's a really cool spot, man.
Sounds scary as hell. Like, that's what I want to do right now.
You expect to see John Wick in there, Dinesh.
By the way, that would be the only place I would actually be near you, Dinesh, with Corona, because it's 100 Celsius in there, and that's the only place I will feel safe because the coronavirus would get
perfect time. Done. I'll bring I'll Corona my ass over. It'd be great.
All right, guys, are we ready to call it a day? I got a big decision to make. What the hell do I do with my short puts on Tesla here at 450?
I think you should stop playing those markets and sign up to the Bitcoin.com exchange.
Yeah.
If you open up a Badger wallet, we'll send you BCH.
Alex already has a Badger wallet.
I stole all of Dinesh's BCH.
Great. Ben's already a fan. But, Ben tries to keep neutral with his whole reporter sort of situation. But yeah.
Well, this has been an awesome 4 hours.
This has been way too long, and my girlfriend is probably just asking me like, "What the fuck are you doing?"
You're gonna pass out when you get off, huh? How many of those whiskeys have you had?
This was a full bottle.
Yeah, it looks like it was. Past tense.
Yeah, I'm a few drinks myself. All right, guys. Hey, Alex, thanks for rocking the hat, man. Thanks for rocking the unconfiscatable hat. There.
Yeah, 100%. Next time it'll be Market Rebellion for John, but I love you guys. Thanks for having us on.
Yeah, no, I got to plug. I do have to plug the Financial Summit. I think we still have about 700 viewers. Hey, guys, we are doing the Financial Summit. I'm going to try and get some of these guys to come and attend in Bali. Hopefully, travel bans will be lifted by then. We have Understanding Bitcoin over in Malta taking place in October. And if you want to support this podcast and my work, please check out the affiliate page. I need to add Market Rebellion in here, John. You and I will talk offline. I'll throw a link for Market Rebellion in here. You guys are doing good work out over there. I love it.
And then don't forget Vegas next year. We're back again.
That's right.
And Vegas, another poker tournament. It'll be fun.
Yeah.
Awesome.
Perfect.
You guys be safe. Have a good one.
Thank you, guys.
Thank you.
Thanks, guys.
Thanks, everybody.
You've been amazing. Alex, you've been awesome. Thanks, everybody else.
Hey, thanks everyone for watching. It's awesome to get a bunch of people together and come back. I'm probably not going to do another video today, but come back tomorrow morning and we'll do a little market recap before market opens. Talk to you all on the next